All right, welcome back. Let me just get everything started here. Looking good on my end. Welcome back to the channel, Crypto Trend Trader, with a Sunday evening market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so today we're going to be doing a rundown. Typical crypto. We'll do the DXY 10-year treasury yield. And then we'll do our indexes, stock market indexes. We'll get into our commodities. And then, of course, take a look at the tech sector as well. And a couple outliers. So, but typical stuff. Before we get started our regular way, though, I do just want to talk a little bit about Bitcoin. Very obviously got a massive sell-off in crypto markets. Pretty much 20% or more across the board. And, we've been calling for it exactly with the bearish divergence taking place. Essentially got a slight push back up here, sort of back in line with CME futures. I believe they closed at a little over 58,000. So, but as you can notice here, I have pulled up on the chart, Polkadot in the bottom left here. I have basic attention token in the bottom right. I have Doggy Coin in the top right, and then Ethereum on the left. And then the Bitcoin chart looks obviously very similar to three of those. But you will notice actually that Doge basically didn't sell off at all. It barely sold off. That in many ways, you might look at that and say that's good. Everything else was weak and it stayed strong. But to me, it's sort of the opposite. I look at that as essentially being, you could say, yeah, all the Doge holders in the whole world have strong hands. They have diamond hands. So that's why it didn't sell off. But in my opinion, it's the opposite. Thank you, brother. Appreciate you. I honestly think it's the opposite. I think that speaks volumes for the centralization of Dogecoin. There's literally, I think it's 10 wallets hold 75% of Doge or something like that. And one wallet has over 50% of the entire supply of Doge, which has an unlimited supply. So there's already a massive supply, potential for even more supply, and then one person holds over 50% of it. 10 people hold over 75 or 90%, something ridiculous. So if you're one of those people that's anti 1% or 0.1% or whatever, better be careful with Dogecoin, because Dogecoin is literally that exact same system, but in the crypto universe. So, so a lot of people are saying Doge is strong. Diamond hand Doge coins, diamond hand Doge holders, whatever. I think it's the opposite. I think when that thing decides it's going to die exponentially worse than anything else does. So this is just a straight up warning. It's not financial advice. I'm not your financial advisor. Markets are extremely volatile. You know that. If you're involved in Doge, you're probably up massively already. So it doesn't matter. But I would just be very, very careful, more so in Doge than anything else. And that counts for stop losses too. Because if you're not aware of how a running stop loss works, if you put in, and again, things may have changed since I used Coinbase last, but you can have your stop loss jumped. Something like Coinbase, I've had my stop loss jump before. And what that means is there will be a sell-off and the matching engine will fail to match your stop loss, or it will sell off to trigger your stop loss to be put onto the books, and then it will already be below what your stop loss was before the actual stop loss gets hit. The price will already be below it. Therefore, your stop loss just stays in the books. You're still in your position and you failed to get your stop loss to work correctly. Now, there's other exchanges like Kraken, which your stop loss is just a resting order in the books from when you put it into your position. So you can basically have a long position open and then a stop loss if it sells off. But you can get your stop loss basically happens called a running stop. And what a running stop is that basically the stop losses are in order that they were put into the books. So if your stop loss was put in yesterday and somebody else's stop loss was put in a week ago and they're at the same level, the one a week ago will activate first, because it's first in, first out, FIFO. So what can happen is if a lot of people have their stop loss at the same position, or a lot of people have their stop loss in at a different position but before you, price action starts selling off and it matches those stop losses in order that they were placed into the books. So what happens a lot of time is that price will already be substantially lower than what your stop loss was, but your stop loss was triggered but it's waiting, it's working through all the other stop losses that were in order before yours. So your stop loss might be at a higher price. Price action starts selling off and it hits all the other stop losses in order of when they were placed, not in order of price. So anybody that stop loss that got hit is going to get hit before yours because yours was recently placed if other people's were placed a while ago. So you can have situations where you put like a 4 or 5 or 10% stop loss in and a massive dump can come in and you can see like a 50% drop in price and then your stop loss will get hit at minus 50%. So you have to be very, very careful with these things. And even though you consider yourself or feel protected with a stop loss, it's very important, in my opinion, for me to take profits along the way, just in case something like that happens. Just in case there's a situation where there's a massive running stop or something like that, so you don't just get wiped out. Or in case that, you know, price never recovers and, you know, you don't have a stop in or whatever the situation, just it's better safe than sorry. And of course, in hindsight now, looking back, and I was right. Obviously, there was bearish divergence. Obviously, the entire market sold off over 20%. Obviously, now you sit back and you look at it and you say, well, yeah, of course, now that it happened. Well, I was telling you about it ahead of time. I told you the reasons it was going to happen, told you exactly why it was going to happen. And honestly, in my opinion, I'm not sure that it's done yet. So we need to be very careful here. But in hindsight now, we can sit back and we can talk about why I was right, why I expected it to happen, and why my exact target got hit. So, we'll get into that in just a sec, actually. You know, what we'll do is, let me grab this Bitcoin chart, actually. This is the Bitcoin chart that we were looking at previously. All right, so this was our Bitcoin chart here. And again, we'll get into our normal rundown and everything. I just want to talk about this briefly. So the last thing we were talking about, obviously, when I made the previous video, you know, price was all the way up here, way up in this range right here. And for whatever reason, I'm missing one line on this chart. So I'm going to actually draw in the line that was on here last time. Maybe I did grab a different chart. But essentially, this is what we were paying attention to. It was this line right here. And I'm going to turn off the moving averages real quick just to kind of clean this up. But essentially, this is what we were looking at last time. I'm going to just make this one yellow. So we had, obviously, this wedge that we were inside of, and I talked about how we broke down out of that wedge and tried to come back up and retest it, failed to get back to it, and how I expected us to push up once higher and put in a third drive of bearish divergence on the daily. I'm on the 4 hour right now, but on the daily, which we did exactly what I said was going to happen. And you'll notice that we bounced one time, 2 times, and then I put that into place. And then when we came down to it a third time, you know, that was obviously a nice place to take a long or close your shorts, etc. At which point in time we got our third bounce off of that range. So when we came down to, you know, and actually it should be drawn just slightly different. When we came down to this yesterday, Saturday, and we bounced it like that and just started lingering around to it, you could look at it one of 2 ways. You could look at it as we're going to find support one more time and bounce off of it. Or if we break down from it, you want to be out of your position. And you can see that both those things were true. People were looking to take longs off of this position. But also, the second we broke down from it, the close below it was already substantial. And the wick below it was even more substantial. You know, you never even had a chance to basically get out of your position. So it was very clear that essentially people had put stop losses in here. They take a long at this position, and then they put their stop loss in place. So if it breaks down from here, you know, they'll be taken out of their position. So then exactly what I said happens. We get running stops all the way down. But where did we come down to? This is the exact line that we were speaking about last time. I told you this green line was not going to be relevant until we had a massive sell-off. And of course, what happened? We sold off directly down and touched that green line. So that's why it's so important to put these things in place ahead of time, because although it looks unrealistic that we're going to just like shoot down to that line all of a sudden, if you didn't already have that in place, what were you looking for? Where was this thing going to bottom out? All of a sudden you're having to like draw stuff in. You have no idea where it's going to stop. You're trying to pull up moving averages. You're trying to draw in like, you know, support lines, resistance, etc. So that's a specific example of why it's important to like plan ahead, have these things in place ahead of time, and have like, you know, a situation. What if all of a sudden we get a massive sell-off? What's going to tell me I want to be out of this position? And although I prefer for like pivots in a market, I prefer like horizontal pivots or moving averages. This is a perfect example of a pivot. because essentially what a pivot is if it hits this level, a lot of people are going to go long. If it breaks this level, a lot of people are going to go short. So this is a pivot right here, because if it hits a level, you could assume that 1, 2, 3, and then the fourth time it's going to bounce it, in the same way that if it breaks this level, it's going to, dump down to our next pivot, to our next key support, etc. So now let's talk about the importance of what happened and how that changes the overall structure of the market. So here we have a high, and then we have a low. And then here we have a new high, a higher high, and then here we have a higher low. So then here you could look at this and say, okay, now we have a lower high. So that's bearish. But really this is internal. This is an internal move inside of this high and that low. So until either this high or that low gets broken, this is irrelevant. This is just an internal move, an internal retracement of the previous high or an internal retracement of the previous low, at which point in time, if it's a retracement of the low, it would sell back off, and then we would take out that low, and then you would say, okay, we now have officially a lower low, we have a downtrend. But if it takes out the high right here, which is what it ended up doing, you say, okay, that's fine. We still have a high, then we have a higher high, then this is just part of that same move, and then we have a higher high. So that's why it's so important to make sure that the market structure is developing correctly and you're looking at it correctly. Because now, if we look at that same exact situation, we have this high right here, and we have this high right here, and then we have this low right here. And now look, did this break market structure? Did this change everything? Look at the 4-hour close on this. No, because we closed higher than that. We have a higher close still. So we have a high, we have a lower high, low. We have a higher high, we have a higher low, then we have another higher high, and so far we have another higher low. So what we're paying attention to, what's going to tell us that this overall structure is potentially in danger, is if we sell off now and we get a 4-hour close below 51,000 basically, just kind of rounding off. So that's what we're paying attention to. And now just to verify that that's accurate on our daily as well, let's look at our daily. So now look, our daily is basically the same level. Technically on the daily, it's like 51,250. And on the 4-hour, it's like 50,900. So around 50,000 to 51,000, basically. 50,900 to 51,200 is what we're paying attention to, whether we're looking at a 4-hour or daily. But so far, we haven't closed anywhere close to that. This level right here, yeah, that's support for sure, because we bounced it previously. It's a horizontal support. You could argue it's been support back here, so that's like a key level as well. You want to pay attention to that. That's where we stopped today. We found support. But in all reality, that doesn't change anything. If we found support right here, yeah, that's good and everything, but it doesn't change the overall market structure. As where a break of this level right here changes the market structure. But it can't just be a wick down. It needs to be a close on a 4-hour or daily time frame. So that's what we're paying attention to. That's the relevant area of this market to me right now. Now, granted, we have now broken down out of this ascending triangle. But now we're finding support at essentially that same level we're paying attention to. And then again, in the event that we break down again, we already have this long trending parabolic yellow line in place that we're paying attention to in the event that we have like a massive capitulation, which again, I'm not expecting at this point in time. There's nothing telling us that this is the absolute top and we're going to capitulate. But if we were to take out this 50,900 level, then I will start looking at that as potential. Because you'll notice every other time we had a high, then we had a low, then we had a higher high, then we had a higher low, then we had a higher high, then we had a higher low, then we had a higher high, then we had a higher low, then we had a higher high. Now, what we're paying attention to is, are we just going to get a higher low? Which so far we are. So there's nothing to be worried about, in my opinion, right now. But there's definitely, once again, warning signs that we're paying attention to in the market. And if we look right here, again, I'm just drawing in to kind of like demonstrate a point. If we look at this on the daily, that's our bottom, and now here we're below that bottom once again. So that's the difference between drawing it off the 4-hour here on candle closes and the daily. So, but again, it's just important to pay attention to that, because sometimes you can get a little bit of the incorrect idea from like a 4-hour or from a daily, that if you were looking at a different time frame, it might be a little more relevant. So, but now let's look at the exact situation that played out that we were talking about. Okay, we get the hard sell at the top of the range. We're pushing up here. Stoch's very high up on here. We have the hard sell. Then we enter and get the hard buy, enter into the bullish control zone, and then what did I say was going to happen? What was I anticipating was going to happen? What was I ready for happening? I was ready for our divergence playing out, because we have here a high, we have a higher high, we have a higher high. Here we have a high, we have a lower high, we have a lower high. Here we have a high, we have a lower high, we have a lower high. That's triple bearish divergence on the daily on both of these oscillator indicators. And then on top of that, we're getting the flash of the divergence indicator, which, what's the divergence indicator? The most reliable indicator. Like, I talk about this all the time, why I love this indicator so much, because we have a hard sell followed by a hard buy at the top of the range, followed by a hard sell again. So if you saw that hard sell post right there at the support level, would you say that's a sell, a buy, a sell at the top of the range with triple bearish divergence? I mean, you said the same thing as everybody else. As soon as this candle opened, it dumped. So that's an exact reason, exact specific example. And if you remember back to the Tesla example, we had the exact opposite signal when it went down to like 550 or whatever. We had the hard buy followed by the hard sell, followed by the hard buy at the bottom of a range after it had been selling off. And I said that's a bullish divergence indicator telling us we need to take a buy off of this position, because it doesn't mean we're going to go to new all-time highs, but it means we're about to have a massive bullish divergence play out in the market. So once again, looking back in hindsight, I told you about all this ahead of time, why I expected to happen ahead of time, and then it played out perfectly. So now we can look back at it, and once again, I can explain to you why, because a lot of times it's more obvious to people after something happens. If I told them about it ahead of time, like, I can come back and say, look, not to be a dick, but I told you so. This is how I told you so. So look out for this in the future, because this could save you a lot of money or make you a lot of money. And again, it's not financial advice. You could buy whenever you see a buy indicator and sell whenever you see a sell indicator and probably still be profitable. But if you see something like this happen and you're warned about it ahead of time, it can stop you from entering into a buy at the absolute top of the range right before a massive sell-off. Because I'm sure a lot of people got the hard buy on whatever indicator they were using and bought the top of the range and literally bought the absolute top of this trend. Or in Tesla's case, sold the absolute bottom of the trend, or, whatever. So now let's talk about, okay, we're done talking about that. So what were some other things that we were paying attention to that were important right here? Okay, we're on the daily now. We're far, far below the 821 cross right here. Okay, we're way down below it like we were last time that happened. Now, what does that mean? We can very easily and very likely we will come back up and retest that cross. That 821 cross is about to take place. There is a very, very high likelihood, like based on statistical, technical analysis of what happens in the past on every market ever to exist, there's a very high likelihood that we will come back up to 58,800 or more and try to save this trend. The bulls will attempt to save this daily 8 and 21 cross. It just so happens also, if we look at, I'll look at it in a minute, but if we look at the Bitcoin futures chart, I'm pretty sure Bitcoin futures closed right at that same level. It closed at 62,000. So in my opinion, there's a very high likelihood that Bitcoin will push back up here, try to get all the way back up to 62,000 and close that gap, and then we'll see what happens. Typically, when you come up and close a gap like that, it'll then just get continuation back in the same direction. There's a very high likelihood comes back up, consolidates, and then we get continuation to the upside, and that was our bearish divergence playing out. There's also a strong likelihood that we actually come back up and put in a fourth drive of bearish divergence. Maybe we even come in and put in a new high. We put in new, lower highs on the indicator oscillators. There's a lot of things that can happen, but being prepared for all of them is the most important thing, in my opinion. So here we have the daily cross getting ready to happen. We're well below that cross. We're still above our 55 exponential, but we're below the 50 simple. If this breaks up, I would expect it at least to come up to 59,000, possibly as high as 62,000, at which point in time I'll be looking to close any positions that I took off the bottom here or any positions that you're already stuck in, because essentially people would be using that as a selling opportunity. Now, if we consolidate long enough, cross this back to the upside, we could very easily save the cross like we did multiple times, and that's fine. There's definitely a possibility that happens, but it's all about de-risking at this point in time for potential what could happen if you did not already exit your positions, or if you took longs off this, to make sure that you don't just end up taking a long, it moves back up, and then you come back down and end up break even or even in a loss. But there's a very high likelihood at this point in time that those situations could play out. So how do we see this coming based on moving averages? Well, in order for a 821 cross to happen on the daily, it has to happen first on the 4 hour. So on the 4 hour here, we got the cross at 62,300 before the dump. Found support on the 89, came back up. This is a perfect example of what I was just talking about. We sell down, we get the 821 cross, we come back up, try to cross it back to the upside, try to save the cross, and then we get rejected, and then it sells off and confirms the cross, and we get a massive dump. At which point in time, in this case, it came straight down to the 89, then it came down to the 200s, then it came down to 377. Matter of fact, it was the better part of the way down to the 528, which is the last moving average I used. I mean, it sold down to 50,000 on some exchanges. Now, of course, on the 4 hour, we're getting a hard buy. You know, we're at the bottom of the range. There's definitely potential for that move back up now for a scalp trade back to the upside. But that's irrelevant right now. My point is that we can look for the pattern of what happened on the 4 hour and expect that to potentially happen on the daily. Or we could have seen that happening ahead of time if you were watching the charts and then gotten out of your position before it happened on the daily. So here at 62,000 is where that was. That was our rejection. That was us moving back up, trying to cross them back to the upside. And then the failed rejection, you know, obviously a bearish candle sell off right there. And then as soon as we closed, that closed the daily and we got the dump. So what happened with the dump? It came down to the 50, 55, almost to the 89. So if the same thing happens again, like exactly what happened on the 4 hour, what would we expect to happen next? On the 4 hour, we came down to the 89, came back up, got rejected slightly above the 821, failed to cross them back to the upside, sold down to the 200, sold down to the 377, almost to 528. Now, I don't think it would be as violent on the daily, but that does not mean it can't be. Like, I mean, this could be the absolute top, and all of a sudden it crosses down. But again, we're in an uptrend. Trade with the trend. The trend is your friend until the end. So what we expect to happen right here, we came down to the 89, came back up, we moved back up to the top of the range, close those gaps, get as high as, 58, 59, even 62,000, potentially get rejected and then sell back off. And next target would be back down at 50,000 or potentially 200 exponential moving average at 38,778. Or, if the same thing happened, it would be like us selling off to like 26,000. Again, it's much less likely to get that extreme of a move on a daily as it is on a 4 hour. But now let's see how that lines up with our weekly. And remember, we've been having divergence on the weekly, and then we also have a bunch of red, histograms selling off. We're at the top of the range. We got the hard buy signal. So remember that signal we were talking about. Hard sell at the top of the range, followed by a hard buy at the top of the range. And now what's about to happen here? We're losing strength, potentially about to cross us back to the downside, potentially about to leave the bullish control zone. So if we get another hard sell here and leave the bullish control zone, what is that? That's our very, very reliable divergence signal at the top of the range. At which point in time, I think based on the weekly chart, this would be very likely the absolute top for this trend. So what's up, guys? Welcome Bubbles, welcome K-Rits, or R-Kits rather. I don't know why I said that backwards. That's funny. Good to see you guys in here. Yeah, I mean, we've been obviously expecting something like this to happen. Does not mean it has to be the absolute top, but what's very likely to happen if we do start selling off? Well, we haven't lost the 8 moving average since back at 10,000. We've been above the 8 on the weekly this whole entire range. So we could easily sell back off to the yellow, to the 21, to the parabolic SAR line, retouch the yellow and then find support. And it's still a bullish trend and it could still go the rest of the year. But is that going to be devastating to people if we sell off to 44,000? I mean, I think probably there's somebody probably bought at 65,000 that's going to be down like 30, 31%, you know what I mean? Or more, depending on what kind of wick we get to come in here. I mean, it could definitely be danger zone. It could even go down as low as like the 50 or 55, but there's no reason to expect that yet. But I'm starting to think there's a very high likelihood of what we've been talking about that 21 exponential moving average getting touched, about the parabolic SAR getting touched. I mean, we've been talking about this stuff. I've been telling you guys about the bearish divergence. I've been telling you guys about the likelihood of the daily and weekly divergence signal. I've been telling you guys about, the histograms, bunch of greens, then 2 reds, then 3 greens, then 1 red, then 3 greens. And what did I say? The last thing I want to see is 3 greens and then 2 or more reds. And now here we are, 1, 2, 3, 4, 5 more weeks. Told you how I was expecting one more push up to the upside to a new all-time high, and then still we stayed red. So we're at a new all-time high, still losing strength, getting likely to have the leaving of the bullish control zone. The knife has been trending down for week after week after week after week. There's a lot of stuff telling us that there's a likelihood that this is at least a temporary top. But again, you know, is it going to be a temporary top that goes down to 45,000? Is it going to be a temporary top that goes down to 30,000? Or is it going to be like the complete market cycle top? And, you know, we just have to see. There's no way to tell for sure right now. But there was a lot of stuff telling us that this was likely to happen. And now that it's played out, we can look back at it and specifically identify the things that were correct and why we knew this was going to happen. You know, and again, you know, I have been talking about this for a couple of weeks, but I also been talking about how I expected a new all-time high, and we got it. Because if we look at, let's go over to our futures chart now. If we look at the CME futures chart, part of the reason that we were expecting that to happen is because the CME futures chart on the daily, once again, had a previous high right here, then a high right here, then a high right here. I'm sorry, right here. And then it had a high right here, a higher high right here, and then a higher high right here. So the CME futures chart on the daily had already printed triple bearish divergence, as where, and again, same thing on both indicators, as where the spot chart did not make a new all-time high right here, so it had not printed the triple bearish divergence. So once again, that's a specific reason why it was important to look at the CME futures chart and the traditional markets like spot markets to see, okay, hang on, there's a very high likelihood that over the weekend, or maybe just one pushes up higher and one doesn't, or maybe now they both push up, but there was a very high likelihood we were going to get that triple divergence play out on the daily, which of course now we can look back and say we did. So now we've crossed the parabolic star back to the downside. We could very easily save it like we did right here. We also have this massive gap in place. So that's exactly what I was talking about, you know, about potentially coming back up here now and filling this gap. In my opinion, there's a very high likelihood that we're going to come back up here and fill this gap. Do we have to fill every penny of the gap? Can we fill it with just a wick? No, we don't have to fill every penny of the gap. We don't have to fill any of the gap. Can we fill it with just a wick? Yes, more than likely we would. If we get sustained price action above, if we come back up and then sustain price action, we'll avoid this cross to the downside and everything will be good. And, you know, we can easily get continuation. But right now, you know, this is the most bearish that some of these charts have looked for a while. We also have left the bullish control zone on CME futures, and we now have the hard sell. The last time that happened, though, you know, the big move had already happened. We came down to a new low, but that was a buying opportunity after that. Here we sort of had the same situation play out. We were in the bullish control zone, and then we got the hard sell a little while later. That was already like at the low at that point in time. So we need to be careful that by the time this exits the bullish control zone here, which I guess it has already on this market, but on spot it has not, that might already be telling us we're at the bottom. So again, we're paying attention to now this move right here on the daily on the futures market is where we're at right now, but that is also that's an internal portion of the move from the high right here to the low right here to the high right here. And then do you want to call that the low right here? Or is this move right here just part of the same move? Which, depending on how you look at it, you could look at it either way. It's not as clear on the futures chart, but on spot market, it's very clear that this is a single move right here. That's a low, that's a high. So what we don't want to do, once again, is take out this low at 52,575. Now, if we take out this low right here, does it start looking bad? Yes, and I'm sure some people will immediately say, that's it, change in trend, we're in a downtrend now. But that's technically not relevant yet. Until we take out this low right here, it's technically not a confirmed, you know, at least short-term downtrend, because we're going from this pivot high right here to that low, and then this could just be part of the same move. So, you know, again, it depends how you look at it, but I'd rather look at the macro and like a better safe than sorry situation. You don't want to jump the gun and get bearish and sell your Bitcoin because we got the 821 cross to the downside and all of a sudden the market's turning around and then you sold the bottom of this move and then it continues on up to like 75, 100, 300,000. But again, you know, it's looking less and less likely at this point in time that that's what's going to happen. So I do want to look at a couple other of our Bitcoin charts here and specifically talk about some of the stuff we were talking about in the last couple of videos. We were talking about volume coming in. This is our spot market again. I have the waddah explosion, TJD Stoch slope, and the TJD Fisher Transform as well. Again, we have massive divergence on all these things, the Stoch slope, the RSI and EMA of the RSI, the Fisher Transform. And then here on the waddah explosion, we were talking about how this one uses volume and price action to tell us different things. So when we got that high up here, we basically got a nice little green, bright green volume candle, and then immediately got darker green afterwards, which the bright green means you're gaining strength, and then the size of the candle means there's more and more volume coming in. As where, like, you know, we get one push up here and then we immediately start losing strength. And then once you lose strength out of the dark green, you essentially go into the red, and that means we're gaining strength to the downside. So you'll notice we have a small red, a medium red, and a big red. That means we were literally gaining strength to the downside as we were selling off here. So you should have easily been able to get out of the market prior to this big, thick red candle coming in. So, you know, and once again, you see it right here where we start losing strength, but we're gaining strength to the downside, gaining strength to the downside, gaining strength to the downside. We start losing strength to the downside, but we're still selling off. Then we gain strength to the downside, gain strength to the downside. And again, look at the height of the candle, not just the color. It's getting bigger and bigger and bigger, which means there's more and more sell volume coming in. And then usually where you see the highest volume will be a combination of buys and sells. So that will actually be the bottom. Or like, you know, a lot of times you'll see like a big candle will come in at the top too. In this case, it's kind of not this. Here's one. So you see we have a big green candle, but it's at the top. That was the actual top of this little move right here. And the reason it's the top is because when there's only buying and something's moving to the upside, there's not that much volume because it's only buying. The same way that when selling off, there's only selling, so there's not that much volume. But when you have buying and selling both taking place within the same like daily or 4-hour candle or something like that, the volume is much higher because it's basically like a fight taking place between buyers and sellers. So as people are buying, other people are selling. So like the volume is going up and up and up because there's just a ton of interest at this price level. And then finally, there's either more buyers and price goes up, or there's more sellers and price continues down. But typically you'll see like that volume peak. Now, we specifically talked about this, how what we were expecting to see if the trend was done, if the trend was completely topping out, we were expecting to see basically, you know, a change in our overall volume levels. Now, obviously, you know, you can't really draw like a diagonal in the same way here, but what we can do is just look at the relevance of these different levels. So here we have the highest volume candle right here. Then we have a lower, higher volume candle here. Then we have a lower, higher volume candle here. And now here on that last sell-off, we once again have a lower volume candle here. So on the daily, what we would expect to see at the absolute top of a trend that's been taking place for months after months after months would be like a high volume candle. So although this is like a break of the range and very clearly we got a bunch of volume come in and it's clearly relevant, you know, we can't quite look at this and say, okay, this thing has totally topped out because we got a massive amount of volume at the top. And you'll see here, we can see on the weekly, like even better example of how the volume topped out right here. And then it's been just slowly tapering off while price just floated up. So here we have the highest volume. Here we have the highest volume of the trend right here. And then we can actually put in like slightly higher highs on the weekly. And now here we have just lower volume. And now here we are gaining strength in the bright green, gaining strength in the bright green. But now here we're losing strength. And now something very important has happened on this waddah explosion as well. You know, since back here on October 20th, we had a positive blue slope to the upside, which meant even though we were seeing variances like week to week in the amount of volume and everything, that we have a very high peak right here on volume, and then we started losing volume, and now here the slope line has rolled over. The slope line is now yellow, and what that means is blue means the slope line is blue, which means we're getting increasing volume. The slope is to the upside. Here now we have decreasing volume, and slope is to the downside. So the next thing that happens after that is we will now see, you know, if it continues on this current trend, we'll now see, you know, first an orange candle or potentially even a red candle, and it will probably be a small one initially. And then if it continues to sell off, it will get bigger and bigger and bigger. And then this slope line will actually it'll be yellow and go down for a while. And then if red takes over, if we see like a red come in like this, or even just an orange, and then we continue to see the volume pick up, the candles get bigger, but they're bigger and red, we'll see actually this slope line, this yellow slope line, will actually flip back over blue. And what that means now is that there's increasing volume to the downside. So the blue represents the trend, but the trend can be in either direction. So here the blue represents a strong trend to the upside, a strong buying trend of volume, and then the yellow represents weakness within that same upward trend. So then if this flips over now to blue and there's red or orange down here, it means that we're gaining strength to the downside. So we're actually having stronger volume come in, but in the opposite direction. So the trend is down and the trend is getting stronger. So that's like the velocity of the downtrend. And then again, if we start selling off, we see a bunch of red candles or orange candles coming in, and then all of a sudden it flips back over yellow again. It means that essentially the trend is weakening and that we're more than likely going to see a bounce or a move back to the upside. So this is a very detailed indicator and a very important indicator if you've never used this before, because it shows you so much more than what you realize you're looking at, because it takes into account price, it takes into account volume at that given price, it takes into account velocity of the trend. It shows you when you're losing strength, when you're gaining strength, when you're losing strength to the upside, gaining strength to the downside. There's so many different aspects of this that it's important, and in my opinion, you should always be taking into account volume along with whatever indicators and oscillators you're using. And that's why I like this one also, the Stoch slope. This is something that I designed. It's so simple. People have trouble sometimes with a bunch of lines or whatever. You can turn off the RSI and the EMA of the RSI if you don't want to see it. But in this case, you only have 3 lines. It's not that hard to keep track of one line that changes colors and then a white line and a yellow line. So, this is a really good one. And now here on the weekly, if we look at it again, we have clear weekly divergence. It did exactly what I said was going to happen. We topped out and flipped the slope line over red. So that's the slope. All this is the cross slash slope of the 2 stochastics line compared into a single stochastics line. And when it flips over like that and crosses, we get a hard sell. So you'll see here, we get a hard sell because it crossed back to the downside, even though the slope didn't change. So you'll sometimes get an S when the slope doesn't change, or sometimes you'll get a blue or a red when they don't cross. So there's actually a lot more to this indicator than you realize. But the most important thing is do we exit the bullish control zone and see a hard sell and see the slope change? So it changes from blue to red. We leave the red highlighted zone and we get the hard sell. That's the most reliable portion of this indicator. And then we can look also at what the RSI is doing. Here the RSI is still making highs. Here the RSI has made a high, made a lower high, made a lower high, and then we clearly have a downward slope on the EMA of the RSI. And then here we have a hard sell and red slope, a hard sell and red slope, a hard sell and red slope, but we're still highlighted red. We have not left the bullish control zone yet. So this weekly indicator will tell you, is this trend absolutely done with, or are we just seeing some weakness within the trend? And you'll notice that the last time we got the hard sell was basically way back here when we left the zone at 9,000. And then this was at that head and shoulders when we left the zone and got the break of the head and shoulders back down to 10,000. And now this would be the first time we'd be leaving the bullish control zone with the hard sell, with the slope, with the RSI trending downwards. All these things lining up at the top of this trend now after $60,000. So does it mean we're at the top yet? No, but are we seeing a lot of warning signs telling us this is potentially the top, at least of this portion of the move? Maybe not the absolute top. Doesn't mean Bitcoin's going back down to zero or anything like that. Doesn't mean it's going to go put in a new low, but there's a very high likelihood we could get an extended consolidation or sell-off. Also, I want to talk about this specific, basically what we were talking about. Everybody saw this going on. After we talked about this triangle, after we talked about, the head and shoulders taking place here, inverted head and shoulders, you start seeing this pop up everywhere. Every channel's talking about it. Every channel's talking about how this, that, and the other. And then we get the break to the upside. This is what we call a throwover. That's when everybody is looking left, and then all of a sudden the action's on the right. So everybody's looking at this potential move to the upside. Everyone gets extremely bullish on this. Everybody's talking about the same thing. And then what happens? We get the breakout. What happens? The bulls push the price up, or the bears push the price up, break through a key resistance level, and then the price pushes up, and then it sells down violently. So what is that, and why is it called a throwover? A throwover is if I move over to the edge of a cliff, and I stand on the edge of the cliff, and I just drop a baseball off the edge of the cliff, it's not going to have that much velocity, because when it leaves my hand, it's just like dropping based on gravity. So it's going to pick up velocity as it continues, and then eventually on its way down, if it goes down far enough, it will reach like terminal velocity. So now if you go to that same edge of the cliff, okay, and you throw the ball up in the air as high as you can throw it, it now has velocity to the upside, goes up, and then eventually gravity wins. It loses strength to the upside, and then it starts to come back down. So now by the time it gets back to the same spot where it started at, there's exponentially more velocity, because in this case, if I just drop the ball at the exact same time right here, I just dropped it off the edge of the cliff from the same spot, versus this ball that was thrown up, and then when this ball is coming back down, and then I release the ball at the exact same time as the ball that already has gained velocity, this ball will go down further and faster because it already has velocity to the downside, as where this one is just being pushed down by gravity. And think about it the same way in price action in this case, where you push the price to the upside. So all the people who had shorts in here, their stop losses get taken out, and it pushes price to the upside. And then all of a sudden there's no strength, there's no buying pressure coming in, there's no continuation. So now all those same people who just got taken out of their short enter new shorts right here. And then meanwhile, all the people that were in a long position start getting taken out of their longs. So now they're actually selling off their long position, or their stop losses are getting hit if they have like a running stop loss. So now it creates more momentum, more velocity to the downside. And that's why it's called a throw over, because you're taking it to the edge of the cliff, and instead of just dropping the price off the cliff, you're throwing it up in the air, faking people out, making everyone think it's going to go to the upside, because everybody's looking at the same pattern. Everyone's looking at the same thing. Everyone's saying Bitcoin's going to $1 trillion, $1 gazillion. It's going to take over the whole world. And then next thing you know, look, we're actually close to achieving a new low, because here, every time price sold off, we got down here, then we sold off to a higher low, then we sold off to a higher low. And now here on the weekly chart, when we look at this, we made it down to that same low again. If we never got this throw over right here, there's like a 95% chance. If we would have just sold off from right here, we would have just found support at the bottom of that triangle and then just got continuation back to the upside. As where in this case, we actually have sold off more violently, and now we're back down to that low, potentially going to go to a new low. Again, I would still expect though, we got the break of a key pattern, of a range, of a resistance level, lost it as support. I would still expect this to push back up, close the gap, potentially get as high as like 62,000, get rejected, maybe just 58,000. But there's a lot of stuff right now pointing that we're going to get continuation back to the upside. And then we can pay attention to, are people selling into this? Are institutions selling into this? Are people taking profits? Are people closing positions because they're not sure what's going to happen? Or is everything good? Because overall, this is a fairly bullish candle, considering it's a really bearish candle. It would have been a gigantic red candle and look horrible on the daily, but instead it sold off and got bought up over 50%. So now it left a big wick behind. So overall, that's fairly bullish. But is that fairly bullish just because we're going to get some micro continuation back to the upside? Or is it fairly bullish because we're going to get macro continuation and put in a new high? I would say micro continuation. I think more than likely we'll get a push back up here, but all these levels are going to act as resistance now. So we got to be careful that this isn't just people closing their positions as we move back up. So, and then did I want to look at another chart? I think that pretty much took care of all the charts. Oh, this is the chart from before. Okay, this is the chart I was looking at. I don't know why I grabbed that other chart and this is not the same one. No, this is the same chart. Okay. Yeah, so anyway, that's our crypto. I guess we could take a closer look at some of the other ones, but you know, I specifically told you guys about how I expected essentially all these cryptos to basically just do whatever Bitcoin does. So, you know, Chainlink broke to a new high, hit our measure move, we took profits, and specifically, you know, this is exactly what happened. We get a massive sell-off, gigantic wick. Of course, it looks extremely bullish because, and another perfect example to what I was talking about the last thing you want to do is get into a nice position, not take profits along the way, and then it sells back off. And you could have just entered the same position again, but instead you're just back to flat because you didn't sell here. Now, obviously it bounced back up, so that's good. But what was the sell-off on this wick? I mean, a lot of people, if you had a stop loss in place on a 27% sell-off, I'm pretty sure your stop got hit. If you didn't have a stop loss get hit, maybe you sold off because you got scared. You know, I mean, that's why it's so important to have a running stop loss and take profits along the way. a trailing stop loss rather. And if you're not familiar with the trailing stop loss, all that means is like, if you take a position down here and then it moves in your favor like a bunch, you move your stop loss off higher so that you don't just get taken back out at break even. Or, if price goes all the way up here, you never take profits and then it comes back down and you still have the same stop loss in place. Then all of a sudden, not only did you lose out on all the profits that you had, but now you got taken out in a loss. So the first level I like to move my stop loss to is break even. The second level I like to move my stop loss to is like my first take profit level after it's above that take profit level. So here, once we got above this level substantially, I'll move my stop loss up. And then once we break above a key support right here, I would move my stop loss up. But typically what I like to look at is once we like bearishly engulf the candle before it, once we take out the high of the candle before it, I like to close a position. But if I'm overall bullish in the market, I'll be a little more liberal with my stop losses and I'll leave it down like a key moving average or a lower level. So right here, it looks like more than likely what will happen is we'll come back down, retest like 34.82, and we'll have to see if that holds. But again, if Bitcoin pushes up here, maybe this puts in a new high while Bitcoin just does like a micro, like internal retracement. This looks more bullish than Bitcoin in my opinion right now. Let's look at Uniswap next. Uni, same exact situation. We hit our measure move right here, take profits along the way. Even this was the hypothetical that I was telling you about. If you didn't buy into this position, you could potentially enter into like another position there. But again, you would have had your stop loss hit on that position, and that was like a 10%, like a rough stop. So that's why you don't want to buy breakouts, in my opinion, because this thing sold off again just in that single candle. Now, granted, if you saw this bearish engulfing candle and then another massively bearish candle, you probably were out of this market already. But that was over 20% sell off from there. And, from the top, from where, this was, I'm going to go from our target to the top. That's why I take profits when I do and like sort of front run these levels. That was 28%. Again, though, you've got to break out. You didn't find support above the previous high here, but this is like a key support level, like this little diagonal descending trend line. So, you would expect as long as it stays above this, even if it floats down, that eventually it would move back up if Bitcoin does that. But again, we got to look out for all this divergence. Might not be done. Basic attention token got absolutely wrecked. This thing sold off, probably just as violent or more violent than just about anything else. 28%. I guess it was about the same. It just seems so much worse. But what did we do? We came back down to that key fib level. That's a key fib level. The previous one, I might have to switch to a longer time frame. That was the 2.0 fib level from before. But again, if we stay up here long enough and we find support long enough and this thing maintains, I still would expect us to move up and go to like $2. But again, we got to pay attention. $2 to like $2.15 is like the 1.618. But if Bitcoin keeps selling off, maybe this pushes back up and then dumps back off. A lot of people are probably going to be looking to exit their position somewhere in like the $1.50, $1.40 range because they're just not sure about the market all of a sudden. Because the truth is, once you see a massive sell-off like this, people are going to lose like confidence in the market, obviously, because you're like, whoa, that hasn't been happening. And now all of a sudden it's happening. Like, I don't know how I feel about that. Doge, we could look at next. I already kind of did like the macro look on Doge. We just got to be real careful. It found support at a very, very key level and exactly where you would expect Doge to find support. It was where we topped out previously, came back down, found support, floated up. But again, until we take out with the candle close 37 cents, this thing doesn't look good to me. It looks okay because we're going sideways, but I'm not just going to rush into this because essentially now what are we doing? We're just potentially forming another one of those descending triangles. So are we going to get bearish right away? No, but did it already have a massive move? Did we already take like massive profits on like a 4x position in a couple days? Yeah, so why even worry about this? Why even trade this right now? Like, that's why we're not buying Doge as an investment. We're trading Doge and using that to buy real things, like actual investments. So again, this looks like to me though, honestly, overall bullish consolidation, just like we got previously at some of these levels. Indicator oscillators are selling off. Price is just going sideways. So maybe Doge goes to $1 next. Maybe it goes to 2 cents. I don't know. We'll have to see what happens. But again, we're starting to develop what I would consider to be a bearish situation. We have right here a very clear top and resistance. We get above it. We find support at that same level, find support at that same level. We have a resistance here. We have a lower resistance here. I would expect very likely that you'll have opportunity to pick up Doge back at 26, 27 cents, at which point in time, it's very likely to come back up to like 31 cents again. And that's a nice like 10, 15% range you can trade. But eventually we just got to pay attention to where the break of that range ends up. And again, we've been in like 821 cross again, back to the upside. I'm on the actual 4-hour accidentally. On the daily here, we've been in the 821 cross again, back to the upside since like 5, 6 cents. But in all reality, you could have waited till like 8 cents and took a long in this and, rode it up. Even if you didn't sell the top, you could sell into like the close or anything around it. You did like over a 3 or 4x on this thing. So as far as I'm concerned, when something 3 or 4x is, I don't even need to mess with it. Like, I'm good. I can look away for a couple weeks or a month or whatever. Let's see what happens. Let's wait and see what develops on this thing before we worry about trading it again. We just crushed it in Doge. There's no reason to just immediately want to run back in and put in more positions in Doge. Let's see what the doggy tells us to do. Is doggy going to behave? Is it going to sit? Is it going to ring the bell if it wants to go outside? Or is doggy just going to shit on the carpet? Because either one's a possibility. So I'm going to do ETH, and then I'm going to jump back over to like Coinbase, MicroStrategy, and Riot, and then we'll take a little break. I'll interact with chat, grab a drink, and then we can move on to some of our other markets. So Ethereum took a big shit here, 2,500 back down below 2,000. I mean, people getting wrecked right here because once again, everybody $10,000 Ethereum, 10,000. You missed your chance. You'll never be able to buy Ethereum below 2,500 again. Well, are you sure? Because you could have just bought it for 2,000. You could have just bought it off the 200 moving average for 2,038. I mean, come on, guys. It's never the last chance to buy. When you hear somebody say last chance to buy, unsubscribe or unfollow or whatever, because it's never the last chance to buy. Last chance to buy is FOMO. That's what that is. So again, not financial advice. I'm not your financial advisor. These markets are extremely volatile. So do your research. Trade responsibly, and don't listen to all these idiots always telling you it's the last chance you'll ever buy this. It's the last chance you'll ever buy that. Well, I'm pretty sure eventually it'll be the best chance to buy it, and it won't be the last chance. It fell short of its 1.5 target, fell short of the 1.618. Does it mean it's done? No. Did it come back down to a key level? In my opinion, this red level was like very important, as that was like a clear resistance. Clear resistance. Once we broke through that resistance, we got our measure move, came back down, checked it for support, and now here we bounced it for support again. So once again, this was very easily identifiable level. Looks like Ethereum's getting ready on the 4-hour to get the cross back to the upside. But again, it's probably going to look more like an internal, nice big thick wick on this thing, depending on what chart you're looking at. But this wasn't one of those situations where only Kraken got these massive wicks. Bitstamp, I think, sold off lower on most of these assets, but we left the bullish control zone and we got the hard sell on the daily on Ethereum. The last time that happened was right here, capitulation dump. The last time it happened after that was right here, capitulation dump. Last time it happened here, we left the bullish control zone, got the hard sell afterwards, not coming straight out of it, but we got a nice little dump. And then, of course, here we got the capitulation, and we are now leaving the bullish control zone, or left the bullish control zone, got the capitulation dump. So, is that it now? Did we sell off and now we're going to continue back to the upside? Yeah, maybe. Based on what's happened last time, yeah, sure. But, I mean, I'm waiting to see what Bitcoin does because, it's going to determine the direction of the market. So that was ETH. We looked at DOT already. Okay, so that's enough of those. Let's go to Riot. Good old Riot. This thing was like we were talking about how weak this looked in comparison to everything else. Bitcoin had been making new highs. Riot had not. This is obviously a mining company for Bitcoin. So, if you're bullish on Bitcoin, you should be bullish on Bitcoin mining. So why does this look like crap? Why is this a giant descending triangle? Maybe it's telling us the truth. Maybe it was overvalued and there was too much of a premium on it for the actual value of it. Maybe it's completely random. I don't know. But, this was definitely telling us the whole time, let's still be slightly bearish or not overly bullish on this. More than likely we're coming back down to like 39.50. If we break through this key descending support and Bitcoin starts moving back to the upside to a new all-time high, once again, I would expect this measure move to play out back to the previous high. But in the meantime, I mean, Riot's been telling us the truth about this market, even when the market was lying to us. So MicroStrategy, man, you guys know how I feel about MicroStrategy. Still down a whopping 47%, 47% less valuable than it was on February 21st. Should I say less valuable though, or should I say that the price is 47% less than some idiots were willing to pay for it back here? I don't think it was ever valued at that 1300, but I think the price was 1300. What's the difference between price and value? Price is what somebody will pay for it. Value is what it's worth. So again, you guys know how I feel about MicroStrategy. Michael Saylor, I think the value of MicroStrategy is $100, which was the stock price before Bitcoin, before the Bitcoin acquisition, and then you take the total amount of Bitcoin divided by the total shares, and then take into account the actual price at the time of Bitcoin, and then we can get a real price on MicroStrategy. So you would have to see, I think, how many Bitcoin Michael Saylor has under MicroStrategy's name, but in all actuality, this thing had a massive premium on it, and it will probably never get back a 50% premium. If Bitcoin goes up double or 50% or whatever, I definitely think we could get back to these new highs again. But my point is, if you take the actual value of MicroStrategy by how much Bitcoin it owned, and then what I would consider the actual value prior to, the Bitcoin acquisition, so $100 plus the value of all the Bitcoin it owned, and then divide it by the share price, like I think you would probably get like a 50% premium. It was priced at 50% higher than what it was valued at. And then I think eventually the price could go higher, but I don't think you'll ever see a 50% premium again. The value could go higher as they buy more Bitcoin, as they take out more loans, but I don't think you'll see that 50% premium. This was a bubble. Coinbase showed a tiny bit of strength going into the close. We talked about this. Everybody that bought into Coinbase since the public offering, since the initial public offering, is down anywhere from like 15 to 10 to 30%, somewhere around there. So until it gets back at least above, essentially this is just, when it moves back up here, people are going to constantly be trying to get out of it, assuming that it's not going to go back to a new high. Once it takes out this high, I would potentially get bullish on it. Once it goes down to the key Fibonacci extension levels that we spoke about, basically down anywhere from like one of these key levels. I mean, I would say probably like 292, maybe 280, maybe 250. Then I might be interested in it. But right now, it just looks like it's essentially a massive bearish sell-off. And now we're just having a bullish retracement of the massive bearish sell-off. So next target to the upside is going to be $350. Then the 0.5 retracement, $365. Then the 618, $380, et cetera, et cetera, et cetera. But in all reality, I think it's more likely just going to stay inside this range. And then we have to see, is it going to break to the upside? Is it going to break that down to the blue support? Or is it going to just start capitulating again? And I think a lot of that has to do with the overall price of like Bitcoin and what the markets do. So, all right, I'm going to jump over into chat here for a minute and interact with you guys. And then we'll get into like, our like typical little rundown, go through all these different markets and see what's going on. Hope everybody's doing well. Good evening to you guys. 18K, baby, let's go. Is that your Ethereum price prediction? I'm just joking. We do still have that gap down there at 18K, so. How long have you been studying markets and stochastics? Kay, I really started taking an interest in the stock market back in like 99. But I've gotten exponentially more interested and more involved through like crypto in the last 4 or 5 years. But again, I've been involved with markets, technical analysis, and been interested in all these things through different periods of my life for the last 20 something years. So quite some time. Stochastics, always been one of my favorite indicators. Indicator wise, I like the MACD, I like stochastics, I like RSI, but less so, but moving averages I like more so. So in all reality, I think moving averages are the most useful indicators you can use, or oscillators, whatever you want to call them. I think moving average is the most important. Then I think stochastics and MACD. And then I created my own Trader's Dynamic MACD, the Jewel Thief, which is basically like stochastics. And then obviously like the TJD prophecy or parabolic SAR with binary pivots, depending on if you use the public version or my version. I created those basically to essentially just make a better version of what I already liked, what already worked. So, but I mean, I obviously use like all those other ones as well. Waddah explosion. I got the Stoch slope is just a simpler version of stochastics combined with the RSI and EMA of the RSI. I mean, you can go on TradingView and check out all my different ones if you haven't used them before. And I don't claim that all mine are the best, but most of them are made to be visually appealing and simple to use, so you can scan like 50 charts in a row and just look at them and go bop 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 bop. I don't even need to know what the ticker is, and I can look at a chart and using like 4 basic principles tell you more than likely what's going to happen. You know, what kind of trend we're in, if we're likely to test this area, that area, etc. But I really like, one of my most valuable tools is like horizontal resistance and support, which I use key Fibonacci levels typically for that. And then if you look at my moving averages, those are based on Fibonacci numbers, not just random junk numbers that somebody picked out of a hat. I use the 6 moving average. I use the 20. I use the 39 because look. No, I don't do that. I use Fibonacci moving averages, and what that allows you to do is it allows you to switch between time frames on a chart and still have relevant moving averages. So a lot of the moving averages based on the Fibonacci numbers, if you use like a 4-hour chart or a 1-hour chart or a daily chart or a weekly chart, and then you switch between them, like the 200 will correspond on a lower time frame with like the 89 on a longer time frame or the 55 on a longer time frame, etc. And essentially all it is just like multiples. You know, if you're looking at a 4-hour versus a daily versus a weekly, what's the difference? Well, the 4-hour times 6 is going to give you 24 hours. That's your daily. Times 7 is going to give you, 7 days, which is a week, etc., etc. And the magic of Fibonacci allows those different numbers and those different moving averages to essentially still be relevant on a different time frame. So you can look at a 4-hour chart with a bunch of different moving averages and have an idea what's happening on a 1-hour chart, what's happening on a daily chart, what's happening on a weekly chart, just by looking at that one chart. So, or you could just look at all the charts and then who cares? But again, I do it for simplicity and efficiency and effectiveness. So, and you'll see obviously I'm right an awful lot on these markets. So even if you said I was right 51% of the time, well, if we flip a coin 100 times, you're going to end up ahead. And then on top of that, if you take into account, risk reward, high probability of success, and, position size, like position management, in the end, I mean, you will succeed. It's just a matter of learning the tools, learning them correctly, and building a solid foundation. So I'm going to take a quick break and grab a drink, and then we can keep rolling. All right. All right. So let's do our typical rundown. Nothing has changed on the 10-year yet, obviously, just because it hasn't opened back up yet. But it will here. And when it does, what's going to happen? Anything could happen here. Like I said, we broke back inside of the channel, which is not bad. It's not great. Obviously, we would have loved to just see this thing just go parabolic to the moon. But, it's doing what I said I thought was going to happen. We're breaking back inside of the channel underneath the red line. But as long as we stay above the white line, which corresponds with our key Fibonacci level here, the yellow horizontal, I think more than likely what's going to happen is we're going to bounce this range. And that's what we've been saying, and that's what I expect to continue happening, because essentially, if we look at right here, we have a very key resistance at the 786, a very key support at the 618, and we would expect it to oscillate inside of there, and then, either go up or down accordingly, but still stay within that range. So between the 618 and the 786 is that range. So we could very easily come back down to the 618, which would correspond probably with that white trend line, and then we can get a bounce and continuation to the upside. Or maybe this thing has topped out. but I think it's very unlikely that we would just top out right in the middle of the 618 and the 786. I think it's still going back up to 2%. But, you know, along the way, what happened here, we sold off. We got that huge bounce all the way back up to the 0.5. Then we came down and put in a higher low. Then we came back up and put in a lower high. Then we came back down and put in a lower low. And it looks like, oh, we're in a downtrend. But are we though? Because we still have our low. Then we have our high. Then we have our higher low. So this is just internal. So the next thing that happens is all this chop as we float up. And now what do we have? We have a low. We have a high. We have a higher low. We have a higher high. So we could come literally all the way back down here to the 236 and just put in a higher low. And I would still be bullish because we have a low. Then we'd have a higher low. Then we'd have a higher low. And then we'd have a high. Then we'd have a higher high. And then eventually I would expect it to bounce back up and put in a higher high. Now, do I think rates are going to drop back down to 0.66? No, I don't. But I don't know what policy they're going to do. I don't know what changes they're going to do. Anything can happen. So, all right, so that's our 10-year. I'm going to jump over real quick here. Just give me one sec. I'll be right back. All right, thank you. Sorry about that. So yeah, we got the DXY next. So essentially DXY, it's same thing we talked about before. Now this is actually opened back up. So we have a tiny bit of price action. We have a little bit of green coming in, a little bit of positive price action. But what did we talk about the last session? Basically that we looked at this as an Elliott wave, 5-wave structure. We have a ascending, broadening wedge, ascending, broadening wedge, and that we're overall in a bearish downtrend. Once we got the break of the bearish downtrend, the top of the 1 and the bottom of the 2 is the retest of the break. Then this, once again, people are looking at this and then we start selling off and saying, oh my God, that's it. We're going back into a downtrend. That was it. But in all reality, it was still, you know, a high, but it was an internal high for what would end up being our 3. So now we have the 1, the 2, the 3, the sell-off of the 4, which now we're finding support at the top of the 1, which is obviously best case scenario because technically, like, you don't want to see the 4 come down lower than the 1 by more than, like, you know, a wick or so, depending on what time frame you're looking at. But we could easily get a wick down here and then it gets bought back up and then get continuation. So that's why I have the 4 at the bottom, because obviously, like, you know, 2 times in a row, that was our support level. So the likelihood is that we would find support here once again. But of course, we could find support at this level right here. This is a very key. We have multiple levels of confluence, basically, at the top of the 1, and then also, you know, the top of the 1 basically right here, and then the bottom, like, support that we found here, and then again, the support that we found here. So anywhere in that area, we would look at that as like a key support level. Now, of course, we could break that, come back down here, find support and continue, or we could just get support right here, and then in all reality, like the 4 was, let me just get that out of the way for a sec. Oh my gosh. The 4 was, you know, just down to there, and that was it. And then we see our continuation, which structurally that's going to look better. But, you know, I look at Elliott Wave as like a series of rules that can sort of be bent, but not broken. And like, you know, it's you got to learn the rules first. This is like a jujitsu thing that I learned that's so important is first you learn all the rules, and then once you get good and you know all the rules, then you can break them. Then you can bend them. But first you have to learn all the rules. And that's sort of how I look at Elliott Wave. Learn the rules first, and then you can sort of like bend and break them. But you got to learn them correctly first. And then, you know, address the situation accordingly. If you get a perfect set of rules that structurally looks perfect, the same way that if you get a pattern and you see beautiful symmetry, then it's much more reliable. But it doesn't mean that that pattern can't still work if it's not symmetrical. And like that's sort of like the bending of the rules or the breaking of the rules with this. So I do still expect the dollar to strengthen, and then, you know, our Fibonacci extension move up to the top of the range, somewhere between like 94 to like 97. So we'll see how that plays out. But again, right now, I still would not be surprised by continued downside, or if we just found support here and get continuation to the upside. But in all reality, nothing has really changed for me. If this is the bottom, it slightly changes our Fibonacci extension targets, you know, but it's not going to be a huge deal. It would be like the 1.618 would be at like 94 instead, which previously, the way I had it, it was at 95 basically. So, you know, it's not going to be a game breaker. If we're right, it's going to be very clear we're right. If we're wrong, it's going to be very clear we're wrong. So, you know, the little stuff in between doesn't make much of a difference. So let's switch over now and look at our indexes. All right, so SPY, nothing really has changed here for us. You know, we got obviously a gap up, sold back off, closed the gap, and then basically just closed at the open. So nothing crazy going on here. Again, still expect continuation until we see something telling us otherwise. At this point in time, we've left a couple gaps behind, but we broke out of a key level. A retest back down to $400 would not be unrealistic. You know, we looked at these oscillators last time, and, you know, we are up at 98.4 out of 100. So, I mean, is there anybody left to buy? Maybe, but according to the momentum indicator, I mean, I would say probably not. But again, you know, no divergence, nothing telling us this needs to sell off. I mean, I don't think the world's getting ready to end tomorrow. Dow Jones, I mean, same thing. You know, we're up at like dangerously high levels, but not quite as bad. We're up at 95, still trending to the upside. Momentum's in our favor. Green histograms, all-time highs. We got the break here, the retest, and now we're getting like continuation consolidation. Looks good to me overall. Again, does not mean that it can't just end tomorrow, but I would say we're more likely to get continuation than not. NASDAQ, IXIC, you know, same thing. It's not making new all-time highs yet, but this thing was such a front runner. This was like the horse that already finished the race and like decided not to take the victory lap yet. Now it's starting to take its victory lap, retesting the all-time high. I tell you, once something gets above the 786, I almost always expect it to just retest all-time high or break to new highs. It very, very rarely will get rejected after it goes that high. Or if it does, it'll still come back down to like our support line right here, which I would look at as a buying opportunity on tech. If we sell back off here, find support and move. Overall, though, tech, like the big tech names, the big movers, look weaker than the overall indexes. Right now, the index funds look overall better, which, what does that mean? Does that mean that we're seeing like some secret buying behind the scenes from like government institutions or something? I mean, I don't know. I'm not going to conspiracy theory it, but if we came out later and found out that they were just like buying a bunch of like index funds, like illegally or through some loophole or whatever, I wouldn't be surprised, but I'm not going to go full conspiracy theory here either. Once again, we're up at like 97. I mean, it's great that we're still moving up and there's still momentum and everything, but what happens every time you get up to this level? I mean, that's a top, that's a top, that's a top, That's a top. So, you know, and that's a much lower top. What's going to happen right here? I mean, let's look at the actual, you know, chart itself and see. I mean, when it gets up high, that's a top. You know, that's a top. This is a top right here. 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 So what is this likely to be? Probably another top, at which point in time that would look like an A, a B, a C inside of an A, a B, and then a C. And in like with Bitcoin dominance chart, we spoke about this specifically, is it's actually possible to get a situation like an ABC correction where you actually get your A, then your B, then your A is down, and then your B is up and actually takes out the previous high, and then the C comes down either to a lower low or even a higher low. So either one of those can happen, and then you get continuation back to the upside. Either one of those can happen, and it's completely acceptable. It's not as common to see it take out the high there, but it's completely acceptable. So would it be unbelievable for us to sell off, come back up to a new high, and then sell back off again? It's not unbelievable to me at all. And essentially what that would look like is, you know, depending on how you're looking at this whole move, you know, from that last year, this was a year ago price action. If we take and put on, if we assume this was the end of a 5-wave structure, which I don't necessarily think it is, but if we just assume that that was the end of a 5-wave structure, you know, a moderate pullback would be back down to the 382, to the 0.5, to the 618. So an A, a B, and then like, you know, a more bullish pullback back down to the 382 is very reasonable to think we could end up back down at 10,600. Or maybe we just get, you know, the more like the super bullish pullback, and we only make it back to the 236, you know, at like 11,800, 12,000 roughly. Definitely a possibility. But, you know, that's, we got to keep that in mind, that in all reality, it's not unrealistic to think we could be ready to retrace this. Now, we could also be a situation where like this is an A, that was our B pullback, and then this is like, or I'm sorry, this was our 1, that was our 2 pullback, and now here we're in the 3, that was our 3 pullback, and, you know, it's either taking place or already done with. That's totally a possibility too, at which point in time we came just shy of the 0.5. So if we sold off and just came back and tagged the 0.5 perfectly, that was our A. And then, you know, maybe the B already topped out even. Maybe it still goes higher. And then here's our C. And we get one final buying opportunity in the green box area that got slightly front run on tech. So, you know, but again, that would be more realistically looking at it as this was our bottom here at 10,500. And then this was our next wave coming in. Which, just out of curiosity, because I can't remember if we did this. So if that was our wave 1, we had a $5,449 move. So if this is our wave 2, 5,449, this is only 3,636. So the wave 3 is often the longest, but never the shortest. So if our wave 3 is done right here, and now we're going to start selling off, or if that was already the sell off, and then we get continuation, that means we're going to have a very short wave 5. Because in order for this to be a valid 5-wave structure, the wave 5 would have to go only up to another 3,636, which would be, I should have done this first. Which would be, assuming that was the bottom, 3,636. You know, we would basically have to top out at like 16,000. I mean, which is still a nice move back to the upside, but it's, you know, it's a pretty pathetic move if you're like all of a sudden bullish, like this is going to just keep running forever. So, but again, that's all hypothetical right now. We're just taking a look at the potential possibilities. Russell 2000, the old rut. This thing was stuck in a rut for a while. Finally got its new all-time high in, and then it's been showing weakness since. Technically has broken out of like a potential downtrend, but, you know, it's showing a lot of weakness at the 618. I would look like fundamentally, maybe like all these smaller companies are going to start doing good now as like the rotation trade takes place. But to me, this looks, prices floating up, oscillators are floating up. I think more than likely we see a rejection at the 786 or even where we're at 618. Once we take out this level here, 2,281, I'll get slightly more bullish, but I mean, I'm not too ambitious on this. I mean, realistically, I'm not too ambitious on small business in general. Now, these are all publicly traded smaller businesses. This is not like mom and pops, like little convenience store on the corner. But again, I'm less bullish on them. I'm more bullish on like massive companies like Amazon and stuff like that. Long run. Vanguard, VGK. This is just the FTSE, the European stock market. You guys know how I feel about this one. We're above a key fib level, but potentially hitting a resistance here at like 67. I would expect this basically to push up a little more and then get rejected, but find some kind of support around like 64. So we'll have to see how that plays out. But we're at like 13 highs since 2013. So 8-year highs and potentially starting to push up towards the all-time highs on this thing. So overall, it's macro bearish, but it's bullish inside of that. And when I say macro bearish, I mean like 10, 20-year bearish, because we're not even at new all-time highs yet. This head and shoulders, once again, I was talking about, I like the symmetry of it, but if we found support here, I expected us to just chop sideways and then invalidate the head and shoulders. I would say that is more than likely happened at this point in time. You can't really look at this as head and shoulders anymore, but what you do have now is essentially a descending triangle where we have flat bottom support and descending top. Oh, this is XLE, energy sector. We got rejected once again at that same area. I'm just waiting for a break to see what happens on this, and then I'll trade it accordingly. I would say overall it's more of a bearish looking pattern, but we're finding support above key levels. I'm overall bullish on this, like fundamentally. Technically, it's not like the absolute best chart right now, but if we look at it on like the overall slope of the 200 exponential and simple moving averages, basically got bullish on this thing again back at 38 bucks, and it's just now entering into a macro bullish uptrend, which I would expect to last for like 5 to 10 years. So ICLN, this is our clean energy ETF, or one of the clean energy ETFs. Again, macro bullish on this thing, but right now it's extremely bearish. It's still down like 30-something% from the all-time high. I'm expecting potential move back up to test the top of our red descending trend line, or potentially the purple one that's been like seriously like kicking our ass lately. But, if we get the break of that, I would expect the measure move back up to at least the 618. But again, this is just going to be a bullish retracement of our bearish move down until the chart starts to show some real strength. Ideally, this was a nice entry point, but I would much rather get entry at like the 382 at like 20 bucks, or the 0.5 down here at like 1675. And then, macro bullish after that. So that's it for our indexes and some random energy stuff that somehow just kind of made its way in there. Let's go to tech next. Technologies. Tesla. We still got to just see what Tesla's doing. It got rejected at the exact area where we said we expected it to get rejected. Is it going to see continuation back to the downside? I would expect it to find support at like 659, 660, somewhere around there, and then move back to the upside. But overall, from the sell-off, it's still an internal retracement from the top back here. But overall, I'm massive bullish on Tesla long term, but short to mid-term, this thing might show some more weakness and take out the low. So we got to be careful. We want to look at basically, does this turn into a hard rejection? Do we find support right here? Or do we get continuation to the downside? Or do we get continuation to the upside? But no reason to be overly bullish or bearish on this right now. I am overall neutral. I honestly, I got to just say I'm indecisive on this right now. I mean, there was great opportunity to take a short-term move here, or a great opportunity to take a short-term move, like a short sell here. But right now I don't see a good position to the upside or the downside. And if I do, I would say it has to be to the downside. And I mean, realistically, like, what are you looking at? Like maybe a 10% move to the downside versus exponential gains back to the upside. Not really a good trade to me. NEO, still showing weakness. Descending triangle, lower highs, $4 and bankrupt a year ago. I would expect this thing to sell back off. When it does, if it does, back down to like the mid to low 20s. If we get a break of this range, if we get a cross of the 821 back to the upside, I could easily see this thing double in. Oh, I shouldn't say double. I could see a 50% move back to the upside. Matter of fact, I think we're pretty much at the position where it's like, okay, can we start looking at what our potential trade would be? If we do start to get like a breakout on this thing, what are we looking for? Maybe like a 10% stop loss, or, Again, I don't typically take like hard stops that high, but you know, that's still 3-1, just back to the 618 at like $50. But in all reality, what would I like to see happen? Ideally on this, I would much rather get this at a lower price. Of course, everybody always says I would much rather get this at a lower price, but is it unrealistic to think that we're going to be able to get a buy-in at like, you know, one of these other key levels? I think we could easily get a buy at the 236 and, you know, ride this puppy back up for something like, you know, something similar to this, where we put in like a 9 or 10% stop loss with like a 70% up move. But if we start really selling off here, I'm gonna get a buy at like the 382. So really just got to play it by ear on this. It's showing no life at this point in time. There's nothing bullish about this. Helion, you know, I talked about this a little bit. We broke down from the lows here. So at this point in time, you know, this thing is below its IPO. So we could easily see this thing go down to like $5 or something like that. But, you know, to me, this is somewhere we could just throw a couple bucks and see what happens. But I'm not looking to enter this thing. I'm not looking to pick the bottom on this thing because the bottom might be zero. Alibaba, we've got that gap that we left behind at 225. So, you know, we didn't break. We got that nice gap up and that bullish news. And the bullish news was that they paid $2.4 billion in fines. So it's kind of like weird to think about, but at least they have closure. You know what I mean? It's like when you break up with your girl and then you're like still kind of ambitious, you're going to get back together. And then finally you're like, all right, it's definitely over. It's bad news, but it's good news because it's definitely over now, you know for sure. But it's bad news because you're like, well, it's over. That sucks. But in the long run, maybe it's good. But in the short term, it's probably still bad. So, but, you know, sell back off, close that gap down here to like 225. Looks like a big descending triangle still. Definitely some still potential back down to like 165 or something. I'm not going to get bullish on this thing, but we did save that long-term trending green line that we got in place here. So, you know, I like Alibaba long-term. They're definitely killing it. You know, they're awesome monopoly and they're doing a great job at monopoly, and all they had to do was pay some fines of 2.4 billion, but nothing changed. They still get to monopolize. They're still crushing it. So overall, long-term bullish, medium to short-term, I see no life out of this for bullishness. It looks bearish. Zoom. Oh, and just a reminder, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Zoom still looks bad. Looks like gold. Maybe going to get that 821 cross back to the upside. I would still expect it to come back down lower. But is it possible that we start to show some strength? Sure, but I want to see it break out of this pattern. I want to see it get out of this descending channel before I get bullish on it. I would rather buy it higher, but with a confirmed breakout of the channel, than just take a risk, take a jump, take a position right at the middle of the channel. So, you know, still just putting in lower highs and lower lows. Bearish. PayPal, you know, internal retracement of the dump in a upward trending channel right now, getting resistance or rejection at the top of the channel, and the 618 could very easily find itself back down here at like the 250 range, at which point in time, you know, it would look like a buy to me, but overall still a bullish long-term, bearish midterm. And what's going to happen realistically if Bitcoin puts in a temporary top right now? What's going to happen to stuff like Square, to stuff like PayPal, to stuff like MicroStrategy, to Riot Blockchain? What's going to happen to these things? They're probably going to get wrecked. Coinbase, they're probably going to get wrecked. Maybe not Coinbase, because like Coinbase is less reliant on upward action and more reliant on fees. So the more volatility is, the more trading there is. So we may see like an inverse correlation between, as Bitcoin sells off, Coinbase might shoot up because they're making more money on fees as people trade more. Apple still looks bullish, but overall maybe topping out. I mean, look, I'm not going to get greedy on this. We hit our measure move. We made, you know, 14%, 12%, whatever on this. So at this point in time, let's wait and see what happens. We broke out of the descending channel, but right now it looks like we're putting in a lower high. Could we easily see continuation to upside? Yeah, I'm bullish on Apple, as I've been bullish on Apple for, you know, the last like, what, freaking decade plus. But, you know, is now the time to get bullish? I don't think so. Is now time to get bearish? You decide. Pinterest did exactly what I said. Topped out exactly what I said. Got the horrible bearish rejection. Sold back off. I'm looking to potentially re-enter this trade once again. You know, what did we do? We came down here. We're closing the gap, basically. So, you know, I'm looking to take a long again at like 73 bucks. If that area breaks, I'll get stopped out, and that's completely fine. You know, I mean, look, it's still a 2-to-1 back to the upside, just to another lower high. It looks like a double top right now. I don't like this bearish sell-off right here. I do not like to see big, thick red candles right there on things that I'm like bullish on. But does it mean that we have to go break this channel? No. But, I mean, I'm going to wait and see. I'm not just going to jump back into Pinterest. I'm not looking for a long right now. Bumble, we talked about this one. You know, overall, probably like bullish, but this is another one. This is like your Coinbase chart, okay? This is the longer version of the Coinbase chart. It IPO'd at 70, ran up, and then has literally turned into a descending triangle since then. A high, a lower high, a lower high, you know, same or lower lows. You know, candle low, it's technically lower on the close. So is there a big possibility this thing IPO'd, people FOMO'd into it, and it's just going to get wrecked down to like 40 bucks? Yeah, probably. Probably. I mean, we can do the same thing we did with Coinbase, and we'll see how it plays out. You know, if we take from the top to the bottom right here, okay, the top to the bottom, and then I'm going to switch this over to orange, and then let's look at where our Fibonacci extensions are to the downside. Wait, what the hell did I do? Oh my God, I'm an idiot. Just kidding. Okay, so obviously temporary brain fart moment. So as a matter of fact, let me get this out of the way. This is our, from the bottom right here, the first initial big sell-off to our top right there. Or I guess you could do one realistically from the initial bottom to the top right there. And then I'll put that one in like pink. And then we can look at what our fib extension targets are. So the 2.618, well, first we could look at the 1.618 was the initial sell-off after the initial bounce. So that already got hit. So the next one in red would be the 2.618 down here. And the first one in orange, like substantial, would be the 1.618 here. So we could potentially be looking for like a long on Pinterest at 51 bucks or $48. But again, I mean, do you really want to get like bullish on this thing like right now? Or do you want to wait and see what happens? Like for me, I'd rather wait and see what happens, you know, on something that's in a clearly bearish pattern that has literally done nothing but sell off since its IPO. So maybe long-term bullish still on this. Dating apps in general, especially ones where like women are in control. I think that's probably like the future of dating and dating apps. But overall, the chart looks like crap. And what does that tell you? That tells you that all the people that were invested in that when it was privately held company are just selling, because that's the only people that could sell it off like that. Because like the people that just bought into it and have all been in a loss since then. So somebody is selling. So it's obviously like the founders, creators, investors. So what does that tell you when the founders, creators, investors are all bearish? Maybe it's garbage. I don't know. VanEck Vector Semiconductor ETF. You know, you guys know I'm massively bullish on semiconductors, but right now I'd much rather be in ETF. I don't want to take chances on something like Taiwan Semiconductor. Don't want to take chances specifically on like some China semiconductor. Don't want to take chances on specifically American semiconductor, because in all reality, most of the semiconductors are coming out of China and Taiwan, and we don't know what's going to happen with China. We don't know what's going to happen with Taiwan, if it's even going to exist, or if we're just going to be like a couple months from now just calling both of them China. We don't know if America is going to get its shit together and start manufacturing semiconductors. So what's the best thing to do? Invest in an ETF and get a little taste of all of them, in my opinion. So, but potentially could be topping out, double top action right here, selling off, but massively bullish long run. But is it possible we're going to be back down at like 240 or maybe 208? Sure, there's definitely a possibility. Or are we going to start like hitting some of these fib extension targets of like 289? Sure. But, you know, again, the time to get bullish on this thing is like off of a key moving average or after a sell-off. Time to get bearish is at a potential double top. So you could say now that there's more than high likelihood it sells off, but I don't want to fight technicals of an overall bullish chart saying that it looks like we're topping out. You know, I like confluence. Walmart, All right, so Walmart was topping out here, but once again, this is the exact same situation. I don't want to buy into resistance. I don't want to sell into support. I would rather sell after we close this gap right here and take this potential sell off after we get like a massive burst up here, or I would rather buy after we come up here, fail, and then find support and then get potential continuation. So for me, Walmart is a neutral position. Here was the area to buy, like we spoke about. Here is the area to sell. But I didn't want to take a sell off this area because we have this massive gap right here. And more than likely, I would rather just take the gap sell. So, we can get a pretty nice trade in here at like a 4% stop loss with, essentially just the gap getting filled and then it just capitulating back down inside the range. So, with a situation like this where it busts out of the range and then gaps down and fails. So right now would be busting out of the range, closing the previous gap down, and then once again failing. But again, I'm massively bullish on Walmart. We had the nice little talk about people at Walmart and all that good stuff. So ARKK still looks like crap, underperforming. ARKF still looks like crap, underperforming. ARKG still looks like crap, even more underperforming. ARKW still looks like crap, underperforming. ARKQ still looks like crap, even more underperforming. Is Cathie Wood done? No. Is she done for now? Maybe. Okay. 5 years from now, I think we will look back and there will be tons of great buying opportunities. But a year from now, are people going to be screaming, Cathie Wood fucked them and they lost all this money because of her and they bought at the wrong time and all? There's definitely a possibility that there is a Cathie Wood bubble and she is on her knees inflating it for the last few months. And this brings me back to my specific point about how I want to see somebody that has been performing well over a 5-year, 10-year, 20-year period, not somebody that just performed extremely well over a 1-year period with an extreme concentration in Tesla and Bitcoin with, 1 year of positive performance. Because I think if you look back at her funds, at ARK and stuff, they have 1 year of positive performance and how many years before that of neutral or negative, underperforming the market. So once again, it's easy for anybody to do good once in a bull run by buying a couple key things. But I mean, the argument for Cathie Wood can easily be negated by the argument for Dogecoin, because you're like, well, Cathie Wood did good, but any idiot that just bought Dogecoin did better. So, I mean, does anybody that just bought Dogecoin and went all in on Dogecoin, are they an amazing investor, or did they just get lucky once? So that's what we got to be careful for. And that's why it's so important to look at what's the performance going to look like over a long period of time, of that asset class or of that asset manager, etc. So that's what we're paying attention to. And, Cathie Wood compared to Dogecoin, I think is a very, very good comparison. Because how many people do you know on Facebook that are like, I've got 200,000 shares of Dogecoin and now I'm a genius. And if you want to learn from me how I succeeded, just buy Dogecoin because dogs in crypto are good. I mean, I know a bunch of people like that are like, I quit my job bartending and now I have $100,000 because I'm an early investor in Dogecoin. And it's like, you bought Dogecoin, so that's good and you made a good choice. But are you just on the GameStop bandwagon? Is GameStop really worth $300 or is it worth $3? We'll have to see in time. To me, it's probably worth $10 to $30. But does that mean that if you bought Dogecoin or GameStop at $3 and it ran up to $300, does that mean you're a bad investor? No. Does it mean you're a good investor though? No. It means you got lucky or you followed the trend. So, we'll have to see. Gold at the top of the range, showing a little bit of weakness, but overall, this is do or die moment. If we get a breakout right here, continuation, consolidation, I'll get bullish on gold. But if we, just kind of hover around here and then sell back off, we're still below the 200 exponential moving average, still below the 200 simple moving average. We still have a negative slope on them. So there's a very high likelihood we sell off back to a new low. But massively fundamentally bullish on gold. Have I been buying gold this whole time? Yes. Have I been buying silver this whole time? Yes. But I was going to do that anyway. It's just even better when price is going down. So I have to kind of look at gold and silver, in my opinion, as a overall savings account. But then you can still speculate in the meantime, if you want to buy the bottom of the range or sell the top of the range, whatever. But I do that digitally. But actual physical gold and silver, I'm extremely bullish on because, like, historically speaking, with multiple thousands of years of, experience, charts, price history, success, I would say that they're the most reliable, quote unquote, bets, or in this case, hedges against like the system collapsing. So, but is this collapse, are gold and silver going to all of a sudden explode to the upside this week? Maybe. Chart says maybe. But statistically, these trends are years and years and decades. So maybe silver reaches $30 in the next week. Maybe silver reaches $50 in the next week. Maybe it takes another 5 years. But eventually, I think these things will massively burst to the upside. So, but silver, just going to do what gold does. We have to just play it out. We're at that same like descending resistance in an overall sideways consolidation phase. Silver still looks better than Bitcoin does, or I'm sorry, than gold does. But overall, it's above the 200 exponential and 200 simple. They're still sloped to the upside, but, they're just lingering, just kind of hanging around right at the 200 exponential and simple. That's not good. You like to usually see a bounce and then a move up and then another bounce and then a higher move up. So that's what I want to see. I want to see some serious strength. Gold silver ratio. This is what we were talking about. Okay. We got a breakout of our gold silver ratio was at an all-time high at 138. And then it's essentially just been forming like this tightening wedge, descending wedge. And then now we've gotten like a breakout, potentially like consolidation, found support. So to me, what it looks like is going to happen is it looks like gold is going to strengthen in relation to silver, or silver is going to weaken in relation to gold. What would cause that? Gold goes up and silver goes up less. Gold goes down and silver goes down more percentage-wise. Or gold goes up and silver goes sideways or goes down. So those are the three situations that would make this chart play out. At which point in time, I would then expect gold to silver ratio to top out again and then put in a new lower low. So we'll have to see, we found support at a key level on the gold silver ratio and then we broke through the range. So are we going to go back up and test our next key support? More than likely, yeah. Or resistance? More than likely, yeah. But overall, I think eventually gold silver ratio will end up much, much lower in like the 30s or the 20s, or maybe even back down at 10. Or if you're like a super silver, like hard on bull, you could say that it's going to reach single digits for the first time in history. I don't know about that, but maybe. Platinum is doing just what we said, potentially bottomed out right here, operating inside of this channel. Potential for the 4 to have already bottomed right here, yes. Could it more than likely come back down and retest, even get like a little push outside of the channel? Sure, definitely could. Playing it by ear though. I think platinum is extremely undervalued. I think it's more than likely going to be the same price as gold again very soon, or maybe even overshoot and be slightly more valuable. What does that mean? 50% move up in platinum, or a 30% move down in gold while platinum goes sideways? Sure, either one of those could happen. I think it's more than likely platinum is getting ready to burst to the upside sometime in the near future. Copper futures, closed an all-time high, or at the all-time high on copper futures. Bullish on the weekly. I'm on the daily. I'm on the weekly chart right now. We got the 821 cross above the 200 exponential and simple moving average. I mean, this thing is massively bullish for the first time in. I mean, we weren't even that bullish back here. The last time this thing went on like an overall bull run, you could realistically argue was back in like 2003, and then it sold off massively. Then maybe you could get bullish again for a little bit back in 2010. So we haven't been bullish on copper for like 10 years, and now it switched over to bullish in August of last year. So it's got like 6 months of being bullish here, maybe a little more of being bullish. So if we're looking for like 3 to 10 years of upward movement, I'd say probably still early, but is now the best time to buy? Maybe not. UEC, Uranium Energy Core. This is a miner for uranium. Massively bullish on this. Once again, just went into a bullish uptrend. God, there's so much on this chart. Just went into a bullish uptrend. I expect continuation for this for years. maybe even decades. But in all reality, right now it looks bearish. I'm hoping to get a good buy on this thing much lower. Hopefully back down at 175 or $2. I would love to grab some more up, but not going to get overly bullish or bearish on this right now. But it does look like we're probably going to have a little more continuation to the downside. URA, uranium ETF, same thing. Looks like it's about to sell off. We have, once again, bearish divergence on this. 1 drive, 2 drive, 3 drive, 1 drive, 2 drive, 3 drive, high, higher high, higher high. Triple bearish divergence on the daily. I would expect a sell-off, much like, what just had triple bearish divergence on the daily? Bitcoin. What just happened to Bitcoin? Massive capitulation sell-off. So could we see a 20% sell-off in uranium? I mean, I don't know if it's going to get a 20% sell-off, but if it does, I'm looking for a buying opportunity. So could we get this bad boy for $15 soon? Maybe, hopefully. Man, I would love to see it at $13.82. Cameco, another uranium mining stock, same thing. Just got bullish on this thing on the daily, massively bullish. Could we see a 20% sell-off on this thing? It's not showing as much divergence, but still showing some bearish divergence. Did it already play out? Maybe. Could we get it for $13.50? Yes, I'm looking for buying opportunities in uranium and long-term purchasing. First Majestic, again, showing weakness, still showing weakness. If silver bursts to the upside, I would expect this to do so exponentially. We hit the top of my accumulation zone. Maybe the 4 already topped out and we get massive continuation, but I got to see a little more positivity. There's too much stuff telling me right now. Gold-silver ratio, gold and silver at the top of a range, and there's just a little too much telling me that we could potentially be seeing further downside. Now, if we take out this parabolic SAR, maybe I can get a little more bullish. 821 cross, start to see continuation. Take out this high at like $20. This thing's going to start looking real juicy like we bottomed out, but we could easily see continuation still. If gold gets back above the 200 exponential and simple moving average, I'm going to start getting real bullish on gold, silver miners, gold and silver spot, or like, physical, all that stuff. USAS, American Gold and Silver Corp, just a miner for gold and silver. This one looks more bearish than most, but we hit my buy zone. We hit my accumulation area. Could potentially just get rejected and keep going lower. I want to see it break out of this descending trend line right here, but, am I slowly accumulating this right now? Yep. Caterpillar, still massively bullish on this. Got to be careful once again for the bearish divergence to play out. 1, 2, 3 drives, 1, 2, 3 drives, potentially coming up for a 4th drive. Massively bullish on Caterpillar. Since I was a little kid playing with Caterpillar toys. I like big yellow machinery that builds and racks stuff and moves dirt. And, we're going to need this for infrastructure. So massively bullish. One of the best charts in anywhere. Tilray. The pot stocks maybe are bottoming out right here, potentially moving back to the upside. I like Tilray overall. It's a great performer. I expect this thing back eventually at $300 or maybe a new high of $1,000. Right now it's at $17. So is anything going to look genius if this goes to $100? Yeah, anywhere from 10 to $30 is you're going to look like a freaking genius. But do you want to suffer a massive drawdown? I don't know. Do whatever you want. I got bullish on this thing back at like $8, and I'm getting more and more bullish as the days go by. You could have even got bullish late and got bullish at $12. Maybe we'll have a chance again at $12. It's at 17 right now. I'm already starting to accumulate again. We're getting, potentially some divergence here taking place. We have a low. We have a slightly lower low on price right here. We have a low. We have a slightly lower low on price right here. So I guess realistically, no divergence taking place on this one specifically. But, maybe we find support on the 200 exponential. Maybe we find support on the 200 simple. But anywhere from 13 to $17, it looks like a good buy to me for long term. But I'm not putting hard stops in on this. So I'll take some drawdown and keep buying. ACB, once again, we have the inverted head and shoulders. We're in my buy zone for the potential bottom of the right shoulder. Anywhere in this range looks good to me. If we start taking out, 550, 540, if we take out $4, I'm going to be massively bearish on this thing and, worried. We are below the 200 exponential and simple, but overall, I think anywhere in this range is a nice buying opportunity. $7.88 we're at currently. I expect this thing up over $30 in the short to midterm. Canopy growth, one more of the pot stocks. Again, here's where we have bullish divergence. We have the low right here. We have a slightly higher low, curving back to the upside. Here we have a low. Then we have a slightly low, well, not even slightly. We have a very clear lower low. And then once again here, we have a low, a much higher low. And then that corresponds with a low and a much lower low. So I bought some of this last week. I put this trade setup in place. That's what I'm paying attention to. 4-to-1 risk reward to the upside, 10% to the downside, 41% to the upside, just to a 0.5 retracement, at which point in time I would be taking profits along the way. This thing could easily sell back off, but it looks like it's finding support at the 200 exponential and simple. Massively bullish on the space, obviously, basically since back here, anywhere in the range of like 18 to 20 bucks. Took profits along the way and, potentially be doing the same thing. But once again, this thing could massively, the pot stocks are going to look like the trade of the century, in my opinion, the same way like uranium, gold, and silver will. Commodities in general. Lemonade still looks like junk. Lost this blue trend line, got rejected after losing it, and now I expect it to come back down and take out the low. If it finds support here again at 80 bucks, what's it going to look like? Just a descending triangle after a massive capitulation dump and losing support. I expect to be able to get lemonade at 52 bucks. Am I going to buy it at 52 bucks or anytime before then? Probably not. I'm not fundamentally like, I don't see it with lemonade necessarily. Maybe I'm wrong. Maybe it's good. Maybe I'll look into it a little bit more as I hear other stuff. But in my opinion, I think a lot of the IPOs from this year probably will end up lower than their IPO. So is it going to absolutely blow my mind if Bumble and Coinbase and Lemonade and all the SPACs end up lower than the IPO prices? No, I think they're all bubbles. And I think anybody that IPO'd this year probably just rushed to market because of the IPO like cringe bubble. So, are we going to look back later on, 10 years from now, and say, oh, I'm so glad I bought these IPOs? Yeah, most of them probably will be up if they're like a legit, fundamentally good company. But was this just an IPO bubble? Was this just a SPAC bubble? Yeah. Yeah. RLC. Somebody asked me to look at this last time, I guess. So we'll just see what happens. Looks like it's about to find support. But, very obviously, capitulation dump. Was that the break of the channel that we were expecting? Well, my target was $1.60. It made it down to $1.88. So, maybe that was your opportunity. Where did it touch exactly? My key support level that I told you. This is beautiful. I literally never looked at this before in my life. Drew this chart a couple days ago. And then in the last couple days, it sold back down to my target 1, which was the bottom of the range, and my target 2, which was exactly where I said I would be taking a buy if I was going to buy on this thing. So, where was that buy level at? It was that previous resistance, turn support, and once again, turn support. Is it going to continue down here and break and get the continuation? Maybe. Is it going to do what Bitcoin does? Yeah, if Bitcoin sells off, this thing is going to get wrecked and come back down to $1.60. If you took a buy off the level I pointed out in the last video at $1.88, I bet you're pretty happy right now because you just bought $1.88 roughly, and you're already up 27% since then. If you thought that I was an idiot when I drew this chart right here and I told you that we probably topped out and we're coming back down to the bottom, then you're probably double thinking that little idiot comment because it went down 25% since then, and to the wick it went down 40%. So if you listen to me and believe me that this was the top and this was the buying opportunity, 40% it went down. So now you have twice as much as you had before. So that's why I do these charts, and that's why it's fun to see how these moves look right after they play out. So Binance, I told you I thought it was topping out already, slightly above the 1.618. I expected to sell back off to the 21. I told you potentially the short position, if it broke down from this level. Obviously, we didn't get the full short position, but if you took the short position on Binance or you sold Binance, from where I told you to take, like I would have sold it to where it went down. It was a 17% move. How did I know all these things were going to sell down 20%? Bearish divergence, hard sell, added the bullish control zone, multiple red histograms. Come on, guys. I do the same thing over and over again, and you see it happen, and I'm right over and over again. So, I SILJ, this was the junior silvers miners. You know, I talked about this specific exact situation. We closed above the key resistance line. Last few times that happened, we were unable to sustain price and got bearish engulfing, unable to sustain price, bearish engulfing, unable to sustain price, bearish engulfing. So what do I want to see now? We were unable to sustain price, bearish engulfing. Do we find support right here and get continuation, or do we just break back inside the channel and get wrecked again? We'll have to see. You know, but I want to see this thing close a weekly. I don't even trust a daily. After we got 4 days in a row, one massive day, 4 days in a row, I want to see a weekly candle close above $16, and I will be massively bullish on this thing again. And you know how I feel about silver. I love silver. I think silver's going to 90. I think silver's going to 200. I think silver's going to 500. But when is that going to happen? 1 year, 3 year, 5 year, tomorrow? I don't know. 10 years? You know, and what's a dollar going to be worth? When silver was worth $500, what's a dollar going to buy you? Probably nothing. You know what I mean? So what is silver really going to be worth in relation to what you buy now? Well, you got to compare it to gold, or compare it to houses, or compare it to automobiles, or compare it to, you know, loaf of bread. Like, because I think if silver's at $500, a loaf of bread might cost $100. So, I mean, what is, probably not 100. Maybe a loaf of bread costs 10 instead of 1. So is silver really just at 50? I mean, it's all relative. DAN rather, Dana. Dude, after that last video, one of my buddies watched this and was like, dude, you know exactly what this is? Because he actually buys like components from Dana, I guess. He works for Honda and buys components from Dana. I guess they like supply a lot of like the components that they use in, I think, GM and Honda both. So he was like, dude, you know exactly what this is. And after he told me what it was, I was like, okay, that actually makes sense. But it didn't occur to me at the time. But, you know, I think this thing is probably headed back to the previous high, probably to new all-time highs. But what is going to happen in the meantime? Could it get a massive sell-off? There's definitely a possibility. I'm very bullish on this on the weekly, but I don't know what's going to happen, just because there could be like supply constraints for, even if they have tons of product, there might be a lack of demand for cars, for new cars, or replacement parts for cars because of, you know, bottlenecks. So we'll have to see really what happens. So we really got to see what happens, man. There's too many uncertainties right now to make long-term predictions on these markets. So about to jump over into comments, and I'm going to cut this one short, guys, at the 2-hour mark here, which is in about 2 minutes. Unless anybody has something to look at real quick. So, but comments aren't exactly blowing up here. So love when you fuck up on the chart and so confused. Yeah. Hey, man. It happens for sure, dude. I can do the same thing a million times in a row and then do the same thing and fuck it up and be like, I'll like confuse myself. And that's what it is too. You know, I go full robot mode when I'm doing these like technical analysis, dude. It's literally just my brain operating without me like rationally thinking. It's literally just like takes over and just knocks it out. And I've talked to people before, like in my private group and mentoring and stuff, how, you know, essentially, yeah, I go full robot on these things. And a lot of times I'll watch my own videos or my own live streams or whatever afterwards. And then I'll be like, oh yeah, I'm glad I said that. Like I take note, because I actually watch back over and will see like what my brain was doing when I wasn't actually thinking about it. Because a lot of times when you go into like full machine mode, your bias is not part of it. And you literally aren't even paying attention to what chart you're looking at. It's just like bop, 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 based on bop, 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 bop. As where when I'm looking at something and like on the spot and I'm analyzing it and I'm over analyzing it, sometimes my bias will get in the way and I will actually like interfere with what I know is right based on my own biases. And that happened to me slightly like earlier in the year with last year actually with like silver and gold. Like I was so like fundamentally bullish on them. I was convinced that they were just going to keep running up. And then like in all reality, I like watched one of my videos and I was like, okay, wait a minute, 821 cross on the daily. We're about to capitulate. We're about to sell off massively. And we did. And, you know, that's like my bias kind of getting in the way because I'm like, the world's going to end, you know, whatever, da da da. You know, this is it. The system can't stay up any longer. But, you know, the majority of the time, 99% of the time, it works out. There's still that 1% though, where my own brain gets in the way of my own brain, or my own bias gets in the way of my own brain, or like, you know, I'll have like a slight like short circuit, like what happened in this video. But it's always funny when it happens, man. You know, I'll bite the bullet. When I'm wrong, I'm wrong. It's just better when I catch it. I hate when I'm like looking back later and I'm like, dude, I feel like an idiot right now. I'm on like a 4-hour chart talking about the weekly or something like that. Or I'm saying like on Dogecoin, I'm saying $1 back when it's at like 8 cents and I meant to say 10 cents. And yeah, definitely happens for sure. So I did want to talk about one thing real quick. People keep saying like Turkey banned cryptocurrencies now and China is restricting cryptos and all that stuff. And they're like, you can't ban crypto. It's not possible. You're right. You can't ban cryptocurrency because it's decentralized. But what you can do is you can make it illegal to buy and sell crypto or invest in crypto or trade crypto. And most people don't want to break the law. So if you make something illegal, majority of people are not criminals. Therefore, they're going to follow the law. Therefore, just saying something illegal or making a law that says something illegal is enough to curb demand for it. So, correct, you cannot make trading cryptocurrency illegal. You can't shut it down or whatever, but you can make it a crime. Therefore, that can stop people from wanting to be criminals that are normally law-abiding citizens because they don't want their house seized, their bank account seized, their cryptocurrency seized. They don't want to go to prison, you know. So, you're right. They can't ban crypto for sure. But they sure can make laws that make it impossible, hard, or criminalize it. That being said, what would happen if they all of a sudden regulate crypto? Okay, they don't need to stop you from owning crypto. They can say, sure, go ahead, own crypto. Don't tell us about it. That's fine. But they can tax the hell out of you or make it illegal for you to ever transfer it into the real world. So on paper, you can be a Bitcoin trillionaire, and that's fine, or a Bitcoin billionaire, or Bitcoin millionaire, or Bitcoin thousandaire. That's fine. But what is the point of Bitcoin if you can't ever spend it? So in the United States right now, they have regulated over the last couple of years during the bear market. All they did was regulate all of the exchanges. They made it so that everybody has to do KYC or you're not allowed to do it in the United States. So what does that mean? That means in order to take money off of an exchange, you have to have KYC, which means your social security, your identification is all linked to it. Therefore, whatever regulations they do put in place, you're not going to be able to get out. You can't skate the regulations. So you will pay taxes when you sell cryptocurrency. You will take taxes when you trade it for cash or you trade it for other cryptos or whatever. And then when people say, well, you can just barter it. I can barter my crypto for stuff. Sure, go ahead. You can 100% barter your crypto for stuff. But that is called breaking the law if you don't pay taxes because that's a taxable event. It is illegal to barter goods in the United States without paying tax on those goods. So legally, if you trade crypto for a painting, for a cow, for other cryptos, you have to pay taxes on your gains on those cryptos. So legally, once again, if you don't want to break the law, you have to do that. So they have regulated it already. So if they want to stop you, they just change it. Like they can say, okay, from now on, you know, crypto is going to be taxed differently than capital gains on, you know, typical speculative assets. Now it's going to be 50% or 75% or 100%. That'll stop people from trading and buying crypto for sure. If you have to pay 100% taxes, what's the point? You know, or whatever it is. I mean, there's tons of ways that people are acting like the government can't do that they can. Maybe they don't, maybe they just go and they flag every Bitcoin address that has over, you know, $100,000 in it or $1 million in it or whatever number they pick. Okay. So then all they do is they flag all these things and they follow them on the blockchain. And the second a transfer comes out of one of these addresses with over $1 million on it, they just say, okay, where'd it go to? And then, oh, it went to Binance Exchange. Let's see what Binance's KYC is. It went to said and said wallet. Let's see what this is. It went to a gambling site on the internet. Okay, let's see what their KYC is. All these things now in the United States are regulated and forced to have KYC. So you think like a bank is going to violate, like not report to the government if all of a sudden money comes from one of these crypto wallets or comes from one of these crypto exchanges or comes from a gambling website or anywhere with KYC? You're absolutely crazy. A legitimate business or a legitimate person is never going to risk criminal activities to save money, especially not save your money, like maybe for their own, but definitely not for yours. So people can argue as much as they want that you can't stop Bitcoin, you can't stop crypto. Think outside the box. We are all notorious for getting involved in crypto early, for thinking outside the box. And that's what makes us so powerful. But somehow over the last couple of years, everybody went full moron and forgot what it meant to think outside the box. Crypto was great because it wasn't regulated and it was outside the system. Now crypto is completely regulated and it's inside the system. But now all of a sudden, nobody can think with their brain anymore. We're all convinced that we outsmarted the system and there's nothing they can do. Crypto is a success now. They can never stop us. Bet. B-E-T. Bet. Yeah, right. I will bet anyone any amount of money that there will be massive regulations in the crypto space in the next couple of years. I will bet anyone any amount of money that the governments will crack down on crypto one way or the other. Now, I don't know what that's going to be. I think more realistically than not, it's going to be like the cannabis sector in the United States, where they fought it for a while and said you couldn't do it, but now they realize we'd rather just tax it and get money from it, because that's better. We'd rather have your money because we realize it's a pain in the ass to try to stop you from doing it. So is that the same thing that's going to happen with crypto? Yeah, probably, man. It's probably easier for the government to just tax it, get money from it, than it is to try to completely fight it. But in the end, it's not going to be the digital currency that takes over. It's not going to be the world reserve currency. It's not going to happen. All these rich, smart, 1%er, world leader, power people are going to come together and say, we don't like it because we didn't get in early on it. So we're going to do this to regulate it. And then we're going to make the actual basket of currencies this world reserve digital currency, or this Fed coin, or this whatever. I mean, it's great to think like that. And I love the ambitiousness of the space and everything. But let's use our actual brains and forget like the whole FOMO mentality. I was right. You were wrong. Bitcoin's going to take over the world. Because in all reality, I mean, Peter Schiff did a video recently, and he was like, everybody wants to compare Bitcoin's price and movements to gold's movements and say Bitcoin is eating gold's lunch. And then he says, well, it looks like Doge is eating Bitcoin's lunch. And, it's hard to argue against that. Doge is up like thousands, compared to like Bitcoin. So is Doge really like the real Bitcoin? Is it the next Bitcoin? Is it? No, it's probably not. But that shows you a clear flaw in that like rationale, saying that because Bitcoin has done so good this last year, or its last like 12 years since its inception, that all of a sudden gold's multiple thousand years of history is all of a sudden invalid and gold is trash and no one wants it. Only dumbass people think that gold is not still the best thing in existence because it has the longest time frame and it's overall the best performing asset over the last 2,000 years. I mean, what else is there? It's the best store of value over the last couple thousand years. I mean, and it's going to continue being because it's dense, it's heavy, and there's no upkeep value. Here's one more quick little thing about Bitcoin compared to gold that I never hear anyone talking about. Okay, stock to flow and all that stuff is great, and I totally get it, and I get what everybody's talking about and everything, okay? But let's talk about this. Once gold is mined, what is the upkeep cost on a bar of gold? Nothing. What is the upkeep cost on an automobile? You have to pay taxes on it. You have to rotate the tires. You have to drive it every once in a while. You have to keep the battery charged, etc. What's the upkeep cost on a house? You have to, make sure that there's not termites. You got to make sure the lawn's cut. You got to repaint it. You got to fix the roof. Okay, there's upkeep costs on all these things. What's the upkeep cost on Bitcoin? The miners have to mine and process transactions. Okay, so Bitcoin has an upkeep cost. All right. That's a fact, a 100% fact. What's the upkeep cost on gold? Nothing. You can take a bar of gold, you can dig a hole in the yard, you can bury the bar of gold, you can come back for it 10 years, or somebody can find it in 1,000 years. And what is it going to be? A less beautiful version of the same piece of gold. What was the upkeep cost along the way? Nothing. Somebody could have forgot about it. They find it later, and it's worth more than it was previously. So there's a strong difference between gold and cryptocurrency. Now, the upkeep cost for you might not be anything because you're just keeping it on a hard wallet. You're keeping it on Ledger. So all you got to do is just not lose your password or not break your Ledger or not get it stolen or whatever, or not sell it because, you're afraid the market's stopping. Like that's different though. There's an actual upkeep cost on crypto. It might not be paid by you. It might be paid by the people doing transactions. But if all of a sudden, like Bitcoin, for whatever reason, goes out of style and people stop mining it, and then all of a sudden, like the fees aren't high enough, so even more people stop mining it, and then the value starts to drop and it starts going out of trend or whatever, Bitcoin could die. I mean, will it go to zero? No, there's always going to be somebody out there that believes in it, somebody out there that always has a miner on, somebody out there that's always willing to buy it for $1,000 or $10 or $1, whatever. There will always be someone in the cult willing to buy that. But it does not mean that Bitcoin can't peak out after 12 years of having a great run, or 20 years or 50 years or 100 years. It does not mean that something like Dogecoin or some real actual functional cryptocurrency can't come around and quote unquote eat Bitcoin's lunch and take over as #1 market cap and whatever. But let's be real here. Bitcoin has already changed since its inception. It was supposed to be peer-to-peer transaction payment method money, and then it turned into digital gold. And now, is it possible that it goes from digital gold to something different or something less useful, or fails after 12 years or 15 years or 100 years? It is 100% a possibility. 100% a possibility. On a long enough time frame, the probability or possibility of anything goes to zero or goes to 100%, depending on how you're looking at it. On a long enough time frame, okay? But it's just something to keep in mind, that there is always a possibility still that gold can fail. The Lindy effect, the longer that something has been in effect, the longer it will continue to be in effect. I trust gold, I trust silver more than I trust the dollar, more than I trust Bitcoin, more than I trust people, more than I trust anything, because it has the longest history and the most reliable. There's no upkeep cost on it unless you're paying someone else to store it for you, which is perfectly fine. But then you're trading security for convenience. You're basically putting it in a safe deposit box. Maybe the bank comes and steals it. Maybe the government comes and steals it. Maybe you're having somebody custody it for you and they go out of business, or somebody crooked steals it. You're sacrificing security for convenience. There's always counterparty risk with all this stuff. So there's a high likelihood at some point in time a major exchange gets hacked. Is it going to be Coinbase? Is it going to be Binance? I don't know. Is there a possibility that we get another situation like that where it completely crashes the crypto markets because there's a massive hack or whatever? Sure, there's definitely a possibility of that happening. Is it likely? Yeah, on a long enough time frame, there will be a massive hack in crypto. There will be millions or billions of dollars in Bitcoin stolen. The more valuable cryptos become, the more incentive there is for somebody to hack it or steal it. Maybe it's not even a hack. Maybe it doesn't even compromise Bitcoin. Maybe some, Trojan virus gets spread all over the internet, and all of a sudden somebody steals all your account passwords or your keys to your hardware wallets or whatever. I mean, Trojans are very easy to use and very easy to give to somebody, and they might not even know they have it. You could leave a Trojan in place for years, and then all of a sudden, boom, you hit everybody all at the same time. So let's not act like there's no possibility that things can't just come crashing down. All right, so it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please, research, trade responsibly. But remember, profits aren't real until they're realized. It is always intelligent to diversify and take something off the table just in case. And on that same note, maybe a meteor hits the earth tomorrow, doesn't eradicate humankind, but it's made completely out of gold. And all of a sudden, gold's like thousands and thousands of years of, value go kaput. Still a possibility. Very unlikely, but also possible. So let's keep all this stuff in mind and remember how important it is to diversify. And on that note, let's remember, the likelihood that this whole monetary system doesn't collapse and we go back into a recession, potentially depression, and then the same system just continues to work for another 50 years. Also extremely likely. We've had the same system for a while. Very likely that the world doesn't just all of a sudden collapse in and all of a sudden cryptos and gold are the only way anybody's out, and all of a sudden you're living in a citadel and you're like a demigod because you bought Bitcoin or you bought gold and most people didn't. Very unlikely situation. More than likely, we will probably just continue to have breaths in and breaths out, and the market and the world economy will continue to act like a heartbeat, and it will go up and down and up and down. But more than likely, it will probably not flatline or, whatever. So just keep that in mind. Don't join a cult. Be smart with your investments. Be smart. Protect your principal. Protect your capital. Just use your brain. People are forgetting how to use their brains anymore, I think. I'm going to jump back in the comments, and then that's it for today. ICX. I think I did. Did I do ICX already? Can't remember. Bubbles S or Bubblies. When do you feel Tilray will hit those highs? I mean, sometime in this cycle. I don't know when it's going to be, but typical commodity cycle is what, like, 3 to 7 to 10 to 15 years. So, I mean, like the previous cycle high was a couple years ago. It topped out before the stock market did, and then was in a bear market, and then just entered back into a bull market. So in all reality, like, I mean, probably in the next couple of years, I would think. Could be 1 year, could be 5 years, but I mean, also, are we talking about the previous all-time high was $300? So typically on a bullish asset, after a bear market, it will make a new all-time high. So if the previous all-time high on Tilray was $300, sometime this bull market, I would expect it back at $300. So if Tilray's at like, about $20, $15 right now, I would expect it to like 15 to 20x sometime this bull market. So if the average bull market on, pot stock is going to be shorter than the average bull market on like uranium, but they're both technically like commodities, I would say probably 1 to 3 years. But, is it going to hit the $1,000 this cycle? I mean, probably $500 to $1,000, in my opinion, is realistic based on Fibonacci extension targets. That's the $1,000 prediction is the Fibonacci extension target of the previous bull market of $300. So the previous all-time high. Is it possible it never gets back to that all-time high? 100% possibility. Is it possible it overshoots the $1,000 mark? Again, 100% possibility. But I base everything not only on possibility, but on probability and risk reward ratio and, position size management. Am I going all in on Tilray? No. Am I going all in on pot stocks? No. But am I speculating with a decent amount of my investment portfolio on them? Yes. Will things change if the United States in the next year or two gets an ETF, like legalizes completely marijuana or decriminalizes marijuana, legalizes CBD, THC, all of a sudden we have ETFs? Sure, things will change, and I will probably diversify out of some of the Canadian companies or into some different ETFs based on, the legalization of the United States. Is that going to happen though? Probably not. I think there's always going to be a couple states that hold out. I think if the federal legalizes it and the states all don't, then there'll be restrictions. Can you trade it in New York, but you can't in, whatever, Florida or South Carolina or whatever state you decide, Texas, you can trade it, but you can't in, whatever, Georgia. Like, there'll always be like some state divergences, and there's always a difference between what's legal federally and what's legal in the states. So it's going to be, you got to kind of play it by ear and see what happens as things develop. But I don't think we'll have a Bitcoin ETF this year. In the United States, I don't think that we'll have a marijuana ETF this year in the United States. But that could easily change. And if it does, that's going to change how I diversify, how I invest, etc. So ICX on Kraken. This one had a decent sell-off. Less of a bounce than a lot of the other stuff, but overall doesn't look bad. But you'll notice here, this was I think we looked at this last week and maybe I just closed the chart on accident or something. But, you'll see very clearly that was our previous top. That was our previous bottom. And now here we're bottoming again. So this is going to look like a key support area for me. I would expect continuation back to the upside. We could very easily save the 821 cross. If we don't get continuation back above it, though, it's going to look like Bitcoin in the daily. And, maybe we push back up to like 250 and then it dumps back off here. But once again, there's a lot of charts that are starting to look like descending triangles, which are typically topping patterns and obviously bearish. So we got to be real careful that we're not at the point where, it's just going to start looking like dump city. Now, granted, we could still oscillate inside this range for a while. Like statistically speaking, we'll go like 66 to like 75% of the pattern before it breaks. But I mean, if this thing breaks, it's going to break back to $1.50. There's key levels before then, $1.86, $1.50, etc. But we just got to be real careful with this. And you'll notice also where the actual wick like bottomed out right here was essentially like in this range, this like little cluster of support right here. So you can see like a very clear resistance turned, support area out of like this zone. It didn't quite get there, overshot. But again, on Kraken, this might look a little different on like Bitstamp or one of the other charts, but big capital gains tax in Australia. Yeah, I mean we're talking about going back up now, like the corporate tax rate up to at least 25, maybe 28%. But in all reality, like if you pay 28% capital gains tax and then like you still have state tax on top of that, you're realistically in the United States paying like 35 to 50% tax. So if something has a 50% sell off, if you sold perfectly at the top and paid taxes on it, you lost half your gains and then you rebought at the bottom, like you basically just like break even. So like unless like markets truly capitulate, there's not even that much incentive to like sell off on it. So it almost like incentivizes you to just hold. But that's how you get stuck in a position for like a 25-year sideways market or whatever. MBL could be good buy in for long term. Yeah, there's a lot of stuff right now that looks good probably on the long term, but could easily sell off massively in the short term. These 1% will always have the upper hand and run the system. Guess it's God's doing. Well, I mean, the fact of the matter is, man, is like, previously in history, you had essentially like countries or continents or like world powers or whatever, like they weren't all like consolidated together, like working together to control the masses. But now through like communication and everything, we have basically like a 1% or 0.1% that all works together through like some of these like quote unquote conspiratorial secret societies to like control everything. But I mean, in all reality, the difference is like, we're like the Queen of England and, all these different like groups working together. Yeah, probably overall. But were they working together to the sense and way that they are now? Like with all these crazy like Bretton Woods agreements and like, one world currency and like all these like, weird little summits and everything. No, they're definitely more together now. But I mean, are we ever going to like dethrone like the 1% or 0.1%? Are their heads ever going to be like on a platter and all of a sudden like the peasants rule again? No, I think honestly we have a slave society. We have like, 2 or 3 like versions of like people. There's like the people on top that are the rulers. There's the people on bottom that are the peasants. And then there's the people on the middle that can kind of like oscillate between the two classes. They're still peasants, but have the ability to like move up at least to like the higher version of peasants or lower version of like the royalty. But in all reality, I think we already have like a complete separation. And I don't think that humanity in general, I think most people in general just want to be told what to do and just want to be like slaves of the system and just go through the motions. And like, as long as they get to like watch TV, eat good food and, fuck, like they're happy. I think honestly that we are primitive in nature, by nature, and that there's always going to be like a ruling class and that it's only probably going to get stronger and stronger. Especially as you have people like Bill Gates who are like private citizens that are like completely going to rule like vaccinations and all this stuff. They're talking about like shooting stuff into the atmosphere to like block out the sun to like stop global warming. Where's the vote on that? Because look, I don't think we should probably fuck with stuff like that. Like, I don't think that's a good idea. But do I have a say, or does Bill Gates have more say than I do? Yeah, and most people are probably like, Bill Gates has money, and he's smart, and global warming's bad, so I trust Bill Gates. Well, I don't think like that, and probably a lot of you guys don't think like that either. I think it's probably a bad idea to fuck with like the sun or like the orbit or stuff like that. It makes me think of that movie Time Machine where they're like, oh yeah, we started like mining. He goes like into the future and they're like, the moon is like breaking up. It's like exploding and like meteors from the moon are like hitting the earth. And he's like, what happened? And they're like, oh, the colonization of the moon went bad and the explosions like blew up the core and, set like into motion like the destruction of the earth and humankind. That's what I think of when people talk about Bill Gates shooting stuff into the like solar system or into the atmosphere to block out the sun. It's like, I mean, do you guys think that's a good idea? Is that really, do we have any like tests or theories or anything that might be bad? Is there a probability that shit could go wrong if we start fucking with stuff on like a massive scale like that? Can we please colonize the moon or Mars before then? Like, just in case? Like, I don't know. It's weird, man. K Ritz says, don't think so. Man, R Kits. I don't know why I say K Ritz. That's so funny. You must just subconsciously make me think of something else, K Ritz instead of R Kits. Perfect, thank you. Stepped away for a bit, so I missed it. Don't worry, I'll go back through the video and see the review for ICX. Yeah, for sure, man. It's on there. Bubblies says tax reduced by half if held over a year. Okay, is that how it is for Australia? Yeah, I mean there's okay, the way it is in the United States is if you hold it less than a year, it's taxed at whatever your tax rate is, which typically for people that are investing, making decent amount of money, it's pretty much like your tax bracket is probably between like 28% and 50%, depending on if you have state taxes, etc. So in all reality, for most people in the United States that are making over like 100 to like $250,000 a year, for us there's no difference between if you hold it a year or not, or it's very little difference. So in all reality, it's like, well, should I just hold it a year and risk losing 20%, or should I just sell now at a profit and pay an extra 5% or no percent or whatever? There's like very little difference there. Now, there's obviously a lot of ways that it can be different though, like your capital gains tax versus like short-term capital gains tax. They obviously offset each other. So if you have a bunch of trading buys and sells, you can offset your buys and your sells. But there's also like weird tax laws that don't apply to crypto that do apply to regular stocks. Like if you sell a stock, like now if I sell like Apple and then I want to take a loss on that Apple sell, I can't buy Apple again within 30 days. So if I say Apple dips 20% and I sell it, I can't rebuy it right away and then just say, oh, I lost 20% on my Apple stock, I'm down $1 million. And they're like, yeah, but you just rebought it. So really you paid 2% to deduct like $1 million in losses. In crypto, you can do that. But the max capital gains like loss or capital loss you can claim is $3,000 per year. But like if you're invested in Bitcoin at 60,000 and it goes down to 50,000 and you just lost $10,000 or $20,000 or $30,000, you can literally sell your Bitcoin, pay your percentage trading fees, rebuy that exact same Bitcoin the 2 minutes later, and then claim that loss towards your capital losses, either short-term or long-term, and then offset some of your capital gains short-term or long-term. So, but again, if you were already up in a profitable position and then you sell, you're just up less. So you're not getting the same capital gains or capital loss offset. So it's serious accounting. And I'm not an accountant. I'm not your accountant. I'm not giving you tax advice, but it's a very complicated system. And there's ways that you can take advantage of it, and there's ways that it can fuck you. Like I saw somebody talking about a Reddit article or something. I don't have social media, so everything I get is secondhand. So take it with a grain of salt. But I know there's a lot of people this year that don't know about tax law or don't know about speculation or investing or whatever that have bought stocks, okay? They have taken a loss and sold those stocks and then rebought those stocks again right away or within days or weeks or whatever. Well, then when you go to file your taxes, you're not going to be able to offset that loss because you rebought within 30 days. So you may actually end up in a situation where you bought stocks, rode it up to the top, rode it back down, sold, and then rebought, but you can't claim that loss against your gain, but you're actually negative or back to neutral. So you still will owe those taxes even though you're down or neutral or whatever. So this is going to be probably there's going to be a lot of people that got really screwed by being new to this stuff. They didn't realize it. The same way that happened with crypto, but even more exponentially because people don't understand that you can't just sell something and rebuy it right away. You have to wait 31 days. And that's actually like sector wide too. Like there's a lot of like fine gray area for like, can you buy like silver and then sell it and claim a capital loss and then go buy gold? Can you buy digital silver when previously you had physical silver? Can you buy physical silver when previously you did? So it gets real gray. And that's part of what's wrong with the United States specifically, is our tax laws are so freaking complicated that there's so many gray areas and there's so many ways you can exploit it. That's why rich people don't pay taxes, because they're not necessarily breaking the law, but they're like skirting the system. I think like the tax law would be a billion times better if there wasn't a whole industry created around it. You know, you have accountants and tax advisors and this, that, and the other, and rich people can afford them and poor people don't, and poor people get audited more than rich people because the return on auditing rich people is very low, as where the return on auditing like middle class to like lower middle class people is very high. You know, all that stuff like just complicates everything. I think it would be much better if we just had a flat tax where it was like, if you made this much money, you pay this much. If you had this much in sales on something, you pay this much. Like, and it tapered as you got higher, but you always paid like a percentage, that there wasn't like all these extra like write-offs and deductions and stuff. Because if Amazon just paid 10% in taxes, it would be paying exponentially more than paying right now. It's required to pay 23% in taxes, but it's able to like subsidize and write off and end up paying no taxes and then get billions of dollars in money from the government. So a company like Amazon actually paid no federal tax and got paid billions from taxpayers. As where if you just had a flat tax of 10%, they would pay exponentially more, because they would go from paying none and getting some to paying some. And I think that the whole system would be better off that way. If instead of having all these reductions and write-offs and like all this like extra complicated bullshit, if it was just simple and easy, and then it was just like bam, bam, bam. Do you have a piece of paperwork that says you sold this much goods, or you made this much profit, or you did this much whatever, or you had this much income, and then you pay this much, bam, it's done. There's not all this extra deductions. It would just be a lower percentage, but got rid of all the deductions, all the complications, all the extra stuff. I think that would be a much better system. But again, that is my opinion. I'm not a tax advisor. I'm not an accountant, etc. So pure evil, agree with those views. Everyone follows thinking their actions are the right way. Free tax file companies are incredibly large lobbies in Washington, making sure that tax code stays complicated. Yeah, 100%. There's like literally a whole industry based on like accountants, tax codes, free indices. This other dude I watch, I can't remember his name, but I saw he did a thing like last year talking about basically like the free file websites and whatever, like file free through TurboTax or whatever. And he said that like they broke down like the code on the TurboTax website or whatever. I think it was TurboTax. And there was like 2,200 different ways that TurboTax would lead you to a path where you had to pay. And it was sometimes it was $100, sometimes it was $1,000. But then there was like 3 total paths that you could follow to get to the free file. So it was like 1 in like 700 chance that you could make it all the way to the end and still have the advertised free file. And then the other 699 to 1 chances you ended up at a pay. And the pay could be anywhere from, you know, you pay them, you know, whatever it was, $100 minimum to like $1,000. So it's like, wait a minute, is that really like legit? Can you really advertise something's free if it's impossible to figure out how it's free? Yeah, technically, I guess. And it's the same thing. Like you have a whole industry, like accountants, you know, tax attorneys, tax, like filing companies. You have a whole industry built on. You have the IRS to audit taxes. You have literally like all these like government jobs and non-government jobs and millions and billions and trillions of dollar industries based on, you know, taxes and making them complicated and keeping them complicated and making them expensive. When in all reality, what should you do? You should make it simple as possible, and you should teach every single kid that goes through junior high or high school how to file their own taxes. Even if they are going to be complicated, that should be a required course for everyone in the United States or for any country really, because what's one thing you're always going to have to do? Die. What's the other thing you're always going to have to do? Pay taxes. So why don't they teach you stuff like how not to die and be healthy and how to pay taxes and file them yourself and save money? Because if you're going to pay taxes for an average of 80 years in your life and it's going to cost you an average of $200 a year to file your taxes, I mean, what does that work out to? Like that's like a whole year's income right there you could save just by filing your whole taxes, like your taxes your whole life. So if you compound that, you take like $200 from the time you're 16 or 18 years old or 14, whenever you start working, you take that $200 a year and then you use compounded interest and then you compound that $200 times your lifetime. That's not going to be like $16,000. That's going to be like $1 million. So they're literally, the government is screwing you out of $1 million. Education is screwing you out of $1 million of retirement by not just teaching you how to do your own taxes and saving $200 a year. So, but we're not going to talk about compounded interest and all that. We're not going to talk about all the conspiracies and everything in great depth, but it's all BS. Has all our information, complicated tax code, and the idea that, yeah, exactly, dice never lie. That's exactly right. They have everything and complete control, complete access, and very soon that whole scam is going to be linked to essentially digital currencies. So everybody's all bullish on crypto and digital currencies. Well, I don't like it. I don't like the control. I don't like people having facial recognition. I don't like the internet knowing what websites you went to. I don't like them knowing what things you purchased online. I don't like them knowing where you drove to because you have your phone in your car and your phone has a GPS to you all the time. I don't like it. I don't like that control. I don't like where it's going to this Minority Report future where, you know, they can basically like anticipate your next move and then hold it against you. I don't like it. That's creepy as hell to me. So in my opinion, that's why physical gold and silver are the most important thing in the world. In a world where China has already gotten rid of cash, there's whole generations now of people that are 14, 15, 16 years old that have never touched or used cash or coins in their life. They've done everything digitally, okay, through either credit cards or phone apps or whatever. They've never touched cash in their life, so they don't understand the power and the utility of something that's been important for thousands and thousands of years to human nature, to humanity, through barter, through like, you know, money, actual real solid money. I don't like that at all. And it's starting to happen already in the United States. We're not that far. Everybody still has touched money or whatever. But I mean, aside from working in like service industry as like a bartender or a server or like a cash industry, there's people that go literally months and years without handling cash. Like I had a buddy who paid me for something in cash like a while ago. And then we saw each other like 6 months later and we had done like an exchange on cash again. We were like pay-per-viewing UFC fights or whatever. And I like open up my wallet and you know, give him cash towards like the pay-per-view that he bought because we're all like watching it together. And he's like, dude, tell me that's not the same cash that I paid you way back when for what and what. And I was like, oh yeah, 100%. And he's like, so you literally haven't put it in the bank or spent it since then? And I said, no, I do everything credit card on card. Like there's no reason to. I have no reason. I pay everything online typically. And if I am going to use something in real life, I'm going to just swipe my card. And that's a perfect example of how cash has slowly become obsolete for like 90% of the population. And the 10% that's still using it doesn't realize it. And the 90% that realizes it's obsolete now doesn't realize it. And then eventually it's just going to be that full 100%. And gold and silver will be the only thing outside of the system, you know, in my opinion. You know, physical gold and silver will be the one thing that can't be tracked. And eventually there'll be laws on whatever. There already are laws now. If you buy over 3,000 or 10,000, it has to be reported so that they can keep track of it. If you buy it online, there's a trail for it. But if you go to a pawn shop or something like that and you buy, depending on what state you live in or what country you live in, maybe you buy $2,999 worth of gold, doesn't get reported. Or maybe you buy $9,999 worth of gold, doesn't have to get reported. There's no paper trail, whatever. And again, I'm not saying that you should, you know, try to trick the government or sham the government or do anything illegal. I'm just saying there's a certain amount, in my opinion, of security or hedge against an overreaching government or potential, like, you know, whatever, that the comfort comes from knowing that you have a little something outside the system. So that's my opinion, you know, and people could argue the same thing with guns. You know, like serial number on a gun doesn't actually track who the gun was sold to. It tracks back to the gun shop where the gun was sold, and then they have records on who it was sold to. So, and maybe they have records based on who they did, like, you know, a background check on, et cetera, et cetera. But there's a certain amount of security in there not being some national registry that tells everybody that has a gun and what gun they have and when they bought it and et cetera, et cetera. And in the future, are they going to try to regulate who buys ammo and who buys guns and who buys gold and who buys silver and all that stuff? Yeah, probably. And honestly, I don't like it. So I think here we probably have more time than most places. But, you know, I know countries like China and Australia, whether it's weapons or, gold, silver, whatever, cash in general, just have different laws and everything. But got to be real careful at where this world's going right now. Dice Never Lie says, it's crazy to imagine with digital wallets too. Your credit card info isn't even shared as you swipe your phone, and it sends a one-time use number for the transaction instead of the credit card number. Yeah, I mean it's crazy to think like, there's a digital paper trail, and that's the only thing that matters. It doesn't matter when that's relevant or who it's relevant to. It just matters that one day, especially on the blockchain, that if somebody cares to find it, somebody cares to trace it, there's enough incentive to go back that they can always trace that back to you. Hit the like button for this bloke, more than deserved. Hey, thanks, Bubblies. But for real, I'm getting out of here, guys. I do massively appreciate all the support, all the love, all the comments. If you're watching this later on, feel free to leave a comment. Make sure you like it, share, subscribe. Make sure that you catch the next live stream. This is our Sunday. We'll be seeing how basically the markets line up. I think I'm going to do again another, let's say we're going to do let's say Tuesday morning live stream, Eastern Standard Time at from 10 to noon or 10 to 11, maybe do a short one. And then we'll have a Wednesday night from 8 to 10 once again. And then we will have a probably Friday morning again. I kind of like the Friday close actually. So maybe like the Friday close around let's say 3 to 5, something like that. That worked out pretty good, it seemed like. And then again, back at our Sunday from 8 to 10. Really enjoying the live streams. I've been getting real good feedback. I haven't seen a lot of growth out of them versus the static videos. But again, that might have to do with the length. I probably should do some shortened static videos or whatever. But honestly, I enjoy these more. I enjoy interacting with you guys more. So, whatever. I mean, I want to keep growing the channel and everything. But in the meantime, this is working out. I'm enjoying it. So I think I'm going to just keep doing this. So definitely appreciate all you guys. Dice Never Lie, Bubblies, R Kits. Actually got it right that time. Appreciate all you guys. Appreciate the love. Good to see everybody. And yes, we will definitely see you on the next one. God bless you too as well, my man. Everybody stay safe out there. Protect your capital. I have a feeling too, we need to be real careful this week in markets, because every time we had a massive sell-off in Bitcoin, we've had a big sell-off in the traditional stock market as well. So I'll be paying attention to futures and seeing what happens this week. There is a very high likelihood that we could see legitimate pullbacks, capitulations, rebalancing, all that stuff taking place here. So let's be real careful and protect our capital, gentlemen. And if there is somewhere out there, I think there's one girl, one lady, one woman ever that watched one of my videos, to you as well. So, all right, everybody. Yeah, that's exactly right, man. Everybody wants that Dogecoin, but in all reality, man, the easy come, easy go. So there you have it, guys. Crypto Trend Trader with that Sunday market update, and I'm out of here.